To go until the start of cash equity trading. I'm Tom Mackenzie here in London. Francine Lacqua is in Rome. And here are your top stories. The plot tightens. Goldman boosts its call on Fed hikes to 5. That's as Raphael Bostic says the FOMC could raise by 50 basis points in March. Slowdown, Omicron hits Chinese factories and the consumer, but stocks and futures start the week mostly higher. And Spotify outlines steps to halt the spread of misleading COVID-19 information in an attempt to quell a growing controversy over its support for the podcast host Joe Rogan. Okay, so Goldman Sachs now starting to price in 5 hikes for these markets for the Federal Reserve in 2022 as Raphael Bostic, as we said, comes out and says, look, the door is open to 50 basis points. Look, it's not the base case yet for these markets, but the door is open. And you'll remember that Jay Powell didn't push back that aggressively on the idea that you could get 50 basis points. So don't rule that one out. And Fed, of course, in terms of Raphael Bostic, he isn't a voting member, but again, he was one of the first to call for the taper. So his voice is being listened to. The futures were pointing to upside, and of course that is what's been reflected now. The catch-up then to that session, another wild session in the US on Friday, solidly ending in the green. And in terms of what's happening, how the play-out comes across in Europe, the Spanish IBEX is gaining more than 87 points, up 1%. The French CAC 40 is also in similar territory, gains of more than 1%. And here in the UK, the FTSE 100 up 0.7% as we continue to wait for that report from the civil servant Sue Gray and the prospects then for Boris Johnson, the UK Prime Minister. Let's look at the cross-asset board to see how things are breaking out again in terms of the future stateside, but also this yield compression that you're seeing in Italy as a result of the political risk being taken off the table to some extent. Francine Lacqua is going to break that down for us shortly. The S&P futures currently flat stateside. The US 2-year yield, and again, the spread flattening continues. 119, just below that 120 level. The 2-year, though, is back below 180 at 178, and the BTPs at 116. So the spread between the BTPs and German bunds closing into about 10 basis points. And by the way, in terms of the 5s and the 30s in the US Treasuries, and we can switch it on and have a look at some of the currencies, but the 5s and 30s, you're looking at a spread compression that we haven't seen since about March of 2020. The Bloomberg dollar index is softer by close to 0.2%. The broader story, of course, with the dollar is strength this year. Euro dollar is at 111. GBP, the pound, is at 134. As we look ahead to the Bank of England, we have the ECB on Thursday and the Bank of England. Before that, the RBA, the BOE, and markets pricing in a 50 basis point hike. The second one, respectively, since about 2014 for the BOE. And just wanted to bring to your attention as well, Bitcoin back above 37,000, currently down 1.6%. Oil is another one to watch as well, currently above $90 a barrel. But Francine, the politics in Italy, you've been watching this, of course, for about a week. You've been following all the twists and turns. We finally have a result, but you're also looking at the implications for the reform agenda in Italy.
I absolutely am. So we're going to try and spin it forward. It's very clear, Tom, that the markets like the results. It's a status quo. But I would point to the fact that after 8 rounds of voting, if you need to actually re-elect a president that A, did not want a second term, that wanted to retire, and that was actually flat hunting, there's something wrong with the system. So there's something wrong with the elections or the way that the elections are held. And it really shows to the dysfunctionality of Italy. The other concern, which markets may not be pricing in, is that does this then force Mario Draghi to govern in different style and therefore weaken some of the reforms that he pushed through because he wants to become president in a couple of years. I know the markets are really, happy with the result right now, but again, there are elections coming in 2023, and Italy has always been pretty volatile politically.
Yeah, is it that short-term relief? It's remarkable, as you say, that Mattarella had said, I don't want the job, and he ends up getting the job, and Mario Draghi himself had to intervene. What about the brand, the Mario Draghi brand, and how it affects his standing within the politics of Italy?
Well, we're still trying to understand exactly why he didn't get it, Tom. So half of the lawmakers really did not want him to leave the prime ministerial job because that would bring instability to the governments and actually widen the spread between Germany and Italy, which it has not. The other half also may have damaged his brand because he does not rule by consensus. He listens to everyone, but then really does what he wants, which is why he's been so good at bringing stability and reforms through. And so the question is whether that changes because his short-term reputation has taken a little hit. But I would say it's really short-term because he's really brought stability and brought Italy back on the European map.
Okay, plenty more with Francine. Of course, we'll be back to Francine in Rome just in the next couple of minutes. But let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Spotify taking steps to stop the spread of COVID misinformation as controversy grows over its support for podcast host Joe Rogan. Some artists, including Neil Young and Johnny Mitchell, have pulled their music over Rogan's show, which has hosted vaccine skeptics. Spotify has now published internal rules stating what is and is not allowed on the platform. Ryanair is taking a cautious view on the pace of the travel rebound, saying it will cut prices to stimulate demand this quarter as more countries consider removing COVID travel restrictions. Europe's biggest discount airline has set plans for an aggressive expansion later in 2022, with 720 new routes and 15 new bases announced for the fiscal year beginning in April. Elliott Investment Management and Vista Equity Partners are set to be nearing a deal for the software maker Citrix Systems. Sources tell us the pair will pay about $104 per Citrix share in a takeover that could be announced as soon as today. At that price, the maker of work-from-home software would be valued at around $13 billion. Walgreens is said to have begun the sales process for its Boots International drugstore, with Sycamore Partners among firms considering bids. It's thought Boots could be sold for as much as £7 billion. Sources tell us that Bain Capital and CVC Capital, who have teamed up on a bid, are considered the early favourites. A listing is also a possibility. That's the Bloomberg Business Flash. Tom, Francine.
Okay, Laura, thank you. Let's get into the key market drivers then with our markets editor, Christina Kino, and Gareth Whitcomb, JP Morgan Asset Management Portfolio Manager. Christine, let's start with you and the calls from Rafael Bosto. At least not the calls, but certainly he's keeping the options open, the door open to a 50 basis point hike in March. And then you have Goldman Sachs pricing in now 5 hikes for 2022. Where are we in the repricing of a more aggressive Fed?
Well, Tom, I think we haven't really fully priced that 50 basis point idea just yet for March. And I think this will be the next battleground as far as what markets are going to be watching for the Fed. I mean, Bostic was pretty punchy in his comments, but also, you know, he's a non-voter. He's also been known to be an art hawk in some of these indications from the past from the FOMC. And so, you know, I think markets are taking that with a little bit of a grain of salt, but it's a long road to March, and we have a lot of opportunities to hear from other FOMC members. And if we start hearing the same tune from the more centrist members, such as Bullard, then markets will really have to start paying attention and potentially reprice that 50 basis point possibility in the same way that they did for the idea of 5 Fed rate hikes this year.
Yeah, Christine, let's also bring in Gareth Whitcomb from JP Morgan Asset Management. Gareth, is it possible that actually the Fed front runs the market, says a big 50 basis points increase, but then cools off for the rest of the year?
Yeah, I certainly think it's possible. I mean, I thought the interview was interesting. Remember, he sort of sided with, thinking that 3 rate hikes this year would be sufficient. I do think it's, more likely than not that the Fed will want to sort of ease into this into this tightening. I think it's unlikely that it will want to start with 50 basis points. But, I think you're absolutely right in your commentary. The market is going to start testing that and see whether other members of the committee are likely to come out and sound equally as sort of aggressive on the starting point.
Okay, so watch for those other members and their commentary around this to see if that solidifies this 50 basis point idea, Gareth. We've also got the RBA tomorrow, then the ECB, the BOE on Thursday. Which of those central banks has most scope to surprise, do you think?
I think it's probably the RBA. I think, people are expecting, never rule out a surprise from the Bank of England. We certainly saw that last year when they were expected to raise rates in November and then stood back. I think this time, though, they will be raising rates at this meeting, which should be the first back-to-back rate hikes that we've seen for some time from the Bank of England. I think the RBA is perhaps the more interesting central bank. Certainly the market is expecting them to be raising rates later this year. But the RBA have been pretty consistent in saying that rate hikes this year aren't on the agenda. Let's see how that pans out. But that would be the place where I'd expect the most surprise.
Yeah, and I guess, Christine, there's so much, of course, pointing to what the Bank of England will do with the most aggressive tightening cycle, certainly for a while. Are we forgetting that the ECB could surprise to the upside?
Absolutely, Francine. Yeah, absolutely, Francine.
Let's go to Christine, and then Gareth will get your point of view as well.
Yeah. Well, from my point of view, I think absolutely the ECB will definitely be one of these central banks that are really kind of underestimated in the markets at the moment. We are watching for those rate hike bets to get to about 1/4 percentage point by the end of December. That really tells you how entrenched, these tightening expectations will be. And it'll be a very interesting contrast with what we hear from the ECB on Thursday, especially because they have been very clear and consistent in their messaging that there will be no rate hikes this year, but the markets are definitely testing them. As Gareth says, markets tend to do this, test central banks, and that's certainly what we're seeing from the ECB this week.
Okay, Gareth, let's briefly bring you in on this ECB call then, and whether or not markets are underestimating, or at least the ECB is going to be compelled to act quicker than maybe it would have liked. Spanish inflation data coming out this morning higher than had been expected.
Yeah, I'd certainly agree with Christine. It's perhaps a contrarian call that maybe the ECB do need to raise rates a little sooner than the market expects. There's been a narrative, certainly over the last 5, 6, 7 years, maybe longer, that Europe just hasn't generated the level of inflation that would be needed for the ECB to move rates. And I think when we talk about the ECB maybe tightening policy, we're talking about rates going from negative to maybe neutral to zero. And that's, I think, there's plenty of reasons why the ECB may think that they would or may want to do that, aside from the sort of good functioning of banks, etc., just to get those rates back to neutral, maybe something that we start to hear more, certainly later in the year.
Okay, Gareth Wickham, JP Morgan, will be getting back to you shortly in just the next couple of minutes. Bloomberg's Christine Aquino, thank you for breaking down the key market themes for us, as ever. At the top of the show, coming up, could the UK be set to see the first back-to-back rate hike in 17 years? We will look more at what is happening, implications for the BOE next. And we'll get some of Gareth's calls as well. As futures stateside turn range-bound, you're seeing solid gains in Italy, though, on the back of that presidential result, up 1.7%. Stay with us. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. This is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We are 14 minutes into the European trading day. 0.9% of the gains you're seeing across the benchmark stock 600. A bit of catch up then with the action stateside on Friday. Another wild day for US equities. Currently, the US futures S&P E-minis are pointing to range bound after having been in the green. The Nasdaq pointing to gains, futures that is, of 0.2%. Across your sectors here in Europe, it's technology that is out of gates quite strongly, up to 0.3%. 2 sectors in the red: basic resources, travel and leisure. Let's get to some of the individual corporate stories then that Danny Berger is watching. Danny, what is in focus for you? What is it for interest when it comes to individual stock stories?
Well, kicking things off with a little bit of activist investor action. It feels like we've had a lot of this over the past month or so, just activist investors getting impatient, waiting for their returns. Vodafone, the latest target, according to sources familiar from Sevian, a great scoop from our Bloomberg team, building a stake in Vodafone. People familiar also saying that they've already begun talks with Vodafone to try to improve some of the profitability, so those shares up 3%. To the downside, we have Ryanair earnings this morning, a more cautious tone when it comes to the outlook for the next quarter. They disappointed a bit in the last quarter due to Omicron, some of the weakness there. Ryanair also trying to stay competitive, gain market share. Because of that, they're slashing prices for airlines. I spoke with the CFO, who did say that they're very well hedged, so this shouldn't hurt margins too much. Still, investors sending stocks lower. And because of the calm and stability that Francine Lacqua's presence in Italy has inspired, we're seeing Italian stocks rally. That's, of course, not just because Francine is there, but the Italian election. We have status quo when it comes to the president and the prime minister, Mario Draghi, sticking in there. So Italy outperforming, and those politically sensitive sectors like banks, Banco BPM outperforming this morning.
That's all they needed, isn't it, the Italians? A bit of volatility, send Francine in, you get some calm across these markets, and clearly that's what's happening this morning. All right, Danny Berger, thank you with some of the stocks to watch. Let's get back to the central bank action then before we get some calls from Gareth Whitcomb, of course, from JP Morgan. Governor Andrew Bailey and policymakers at the Bank of England are expected to hike by 25 basis points on Thursday. That's according to the survey of economists done by Bloomberg. The central bank has been one of the first movers in what looks set to be a rapid global tightening of monetary policy. If the BOE hikes, it would be the first back-to-back increase for UK rates since 2004. Gareth Whitcomb, JP Morgan Asset Management Portfolio Manager, waiting patiently for us. Gareth, we were speaking to Jane Foley of Rabobank earlier. She says maybe the markets are getting ahead of themselves and pricing in these hikes by the BOE. She sees 2 this year. How are you looking at things?
Yeah, I mean, certainly the Bank of England have been, been willing to surprise markets. We certainly saw that last year. I do think, though, they want to get rates up maybe towards the sort of 1% level and then just see where they stand. But there are a lot of moving parts for the Bank of England to digest. You still have, some potential headwinds from Brexit. You have the national insurance rate rise that is coming through later this year. So I think there is a lot of uncertainty there. From the Bank of England. So maybe, a little less than the market is pricing probably doesn't seem unreasonable. That's certainly a possibility. But I think with all of these central banks where you're seeing pricing come through, there is a high degree of uncertainty about what will actually be delivered. Much just depends on the data.
Yeah, and Gareth, now we're talking about a possible tax increase as in the next couple of months. How does the Bank of England actually deal with that? Is there a worry that businesses won't get enough support, and so will that make them a lot more cautious about what they can do with interest rate hikes?
Yeah, I think on balance, it does make them a little bit more cautious. They know that it's coming through. They know that the Chancellor and the Prime Minister this weekend have signalled that is going to occur. But of course, there is the possibility that there could be changes at the very top of the UK government. So they need to just see how the data comes through. They need to see if that tax hike is actually delivered. And it's just another thing for them to put into their economic forecasts and to consider. But I do think the direction of travel is clearly for rates to start moving higher in the UK. Inflation is uncomfortably high in the UK, as it is in the US as well.
Gareth, where does that leave your call on UK equities then? Because there is a view that with the value and cyclical tilt and the fact that UK equities have been relatively underloved in the last couple of years, that this is the year when the FTSE 100 shines. Do you buy into that?
I mean, look, certainly, when we think about our portfolios, when we think about our asset allocation, UK equities have featured quite heavily, certainly over the last 3 or 4 months. I mean, I think we need to just be a little careful about making a big call on UK equities because, they have underperformed for a number of years now. But I think the key thing for our portfolios is diversification, having a mix of different equities as you go through this volatility. And, essentially, we do think that volatility is likely to remain in markets over the course of the year, certainly until we get some more clarity on the direction and the path of inflation.
Gareth, we haven't even mentioned Partygate. If Boris Johnson resigns or gets pushed out, does that make a difference to what you want to buy in the UK?
I think for us, a change at the very top of the government, really it's, we're macro top-down investors. We would certainly be thinking that may alter the possibility of tax increases if you got a new Prime Minister come through into the UK. I think it's very hard to make that call. I think for now the UK as an equity market has some pretty defensive qualities that I think are attractive in a multi-asset portfolio where you're looking for diversification, exposure to a number of different markets, and also as well different styles as well.
Okay, Gareth Wickham, JP Morgan Asset Management Portfolio Manager. Thank you for your time this Monday morning on the defensive qualities of UK stocks as we weigh up, of course, the decision-making by the BOE Thursday with markets pricing in a 50 basis point hike. Coming up, Spotify finally responds to the Joe Rogan controversy and vows to stop the spread of COVID misinformation on its platform. That story is next. This is Bloomberg.
You also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome back to the European Market Open, everyone. I'm Francine Lacqua here in Rome, Tom Mackenzie in London. Tom, of course, we're covering the EU economy and the Italian economy after that presidential election. One stock we also need to mention is Saipem, falling as much as 25%. This is after they updated the markets this morning. This is an Italian oil drilling company, and they said because of logistics issues, because of a number of issues, including the persistence of the pandemic and the increase in the cost of raw materials, they did a profit warning saying that losses for 2021, so this is the last 12 months, could equate to more than a third of share capital, something, of course, that the market is not liking at all, and that share price down some 25%, Tom.
Yeah, some very real challenges then for Saipem in the face, as you say, of the pandemic and those input costs. Let's switch focus to another corporate, a very different story this time, though, around information, the way information is communicated, particularly around COVID-19. Spotify has outlined steps it will take to halt the spread of misleading info about COVID-19 on its audio streaming service. Musicians Neil Young, you may have heard of him, and Joni Mitchell pulled their music from the platform last week in protest over virus misinformation shared on Joe Rogan's popular podcast. Joining us with the details then is Bloomberg's Laura Wright. Laura, first of all, the changes that Spotify has said it's going to be making, what are they, and are they likely to be effective in addressing these concerns?
Well, they've updated their platform rules. They've added some content advisory. So any content that is deemed to be dangerous, deceptive, sensitive, or illegal is going to be prohibited in the future. So traditionally, Spotify was seen as having more of a laissez-faire approach to content. That seems to have changed. The CEO, Daniel Ek, acknowledging the criticism in a blog post, Spotify outlining they're going to be more transparent in the future. The Rogan Experience generates 200 million listeners every month. It's the most listened to podcast, and that's why Spotify paid $100 million to purchase it exclusively back in 2020. It is inflammatory, it's contentious, it courts controversy. So the podcast, for an episode recorded at the end of last year, led to an open letter from 200 medical scientific professionals because it refuted the efficacy of vaccines in young people and also questioned some treatments which are unproven at present.
1 minute. Yeah. So, Laura, does it mean that actually the measures taken by Spotify, will it likely stop the boycotts, or is there more trouble ahead over Joe Rogan?
Well, in the last few hours, Joe Rogan has apologized in a video to his Instagram page for causing offense and also to Spotify. Podcast is seen as the next frontier for Spotify. Its share price has tanked over the last year because of stiff competition from Apple. Investors like the idea of this wider pivot. But artists, a lot of them cannot afford to boycott Spotify because they rely on royalties in order to make a living. And artists remain Spotify's most valuable asset. So any backlash from the artistic community is a potential risk to the downside for the streaming music service.
OK, Bloomberg's Laura Wright on that Spotify controversy. Coming up, restrictions on Russia and the latest from the tense situation on the Ukrainian border. We're going to speak to Tina Fordham, head of global political strategy at Avonhurst. Stay with us. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. It will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. The plot tightens. Goldman boosts its call on Fed hikes to 5. As Raphael Bostic says, the FOMC could raise by 50 basis points in March. Slowdown, Omicron hits Chinese factories and the consumer, but stocks start the week mostly higher. And Spotify outlines steps to halt the spread of misleading COVID-19 information in an attempt to quell a growing controversy over its support for the podcast host Joe Rogan. Just to clarify, what Spotify are going to do is put notices around some of this COVID-19 related content, offering viewers, the audience, an alternative route to get that information as well. So not an outright ban. And just to clarify, it's going to be notices just to keep their viewers, their audience informed as well. That story has been unfolding over the last couple of days. Let's check in on the markets then and see how things are playing out. The catch-up that we are seeing here in Europe on the back of a very strong day, an incredible day, remarkable day again. Another one on Friday in the US. We had this late day rebound. The Stocks Europe 600 gaining 0.9%. A big week again for central banks, the ECB and the BOE on Thursday. The RBA, though, possibly, and this has been flagged to us by a number of our guests, the most interesting at least, coming out tomorrow, watching for their reaction. The DAX currently gaining by 170 points. The CAC 40 is also up 0.7%. In Italy, where Francine Lacqua is on the ground, of course, in Rome, seeing gains of 1.4% on the back of that political stability that you're now seeing. Mario Draghi will remain Prime Minister. The President will remain the President. Another term for Mattarelli. We'll get the details on that shortly from Francine. Let's take a look then at how things are playing out across these sectors. It's technologies out of gates at 240. And by the way, yield compression is what we're seeing, whether it's the 5s and the 30s, the 2s and the 10s, but also the BTPs and the bunds as well on the back of that reduced political risk. You've also got 2 sectors in the red. Basic resources down just 0.1%. Travel and leisure lower by 0.6. We had that update in terms of earnings from Ryanair. Cautious in terms of that demand that they are seeing. By the way, oil above $90 a barrel. Okay, let's get back to the geopolitics then. Of course, this is the factor that's playing into those higher oil prices. US senators are close to agreeing on a Russia sanctions bill that could include penalties even if Moscow doesn't send troops into Ukraine. Foreign Relations Committee Chair Bob Menendez says restrictions could be applied based on what the Kremlin has already done. Lawmakers will be briefed this week by Biden administration officials. For more, we go to our reporter in Brussels, Maria Tadeo. Maria, how will these sanctions differ from previous ones? How does this up the ante from the US and lawmakers in Washington?
Well, Tom, we're looking at a package that goes well beyond anything that we saw back in 2014 when, of course, Russia annexed Crimea and it was kicked out of the G8 and there were sanctions put into place. The Russian economy did manage to go around some of those sanctions. This time, however, you would see or could see every major sector of the Russian economy being hit by sanctions. You could also see Russian banks being stopped from clearing in dollars. And, of course, oligarchs and the big Russian money could be hit, too. Remember, by the way, the U.S. administration has not ruled out that Vladimir Putin himself could be targeted by sanctions. The key point here, and you alluded to that just a few minutes ago, is that this could happen even if there isn't an invasion, even if there is no actual military conflict happening between Ukraine and Russia, based on the actions that have already happened when it comes to some of the cyber hacking, when it comes to some of the destabilization that we're seeing in the country already play out. So that is a crucial step. You don't need to see a full-on invasion for big sanctions to kick in. Of course, all of this will have to be approved. This is still in the final touches stage, but that's the direction where it's heading.
Okay, Maria Tadeo in Brussels on the latest when it comes to what is being discussed, Francine, in the US on these additional sanctions. And of course, you are on the ground in Italy looking at the political risk there that's obviously ebbed. But now we're talking geopolitics as well, Francine.
Yeah, we certainly are. Let's bring in Tina Fordham. She is head of global political strategist at Avonhurst. Tina, thank you so much for joining us. I mean, there's a couple of things that, frankly, were quite strange over the weekend, including the Ukrainian president then saying, well, it's the U.S.'s fault that they're scaremongering. So what is the most elegant way to de-escalate this? Russia adding even, bloodlines, of course, on that border. Is it not good if the U.S. actually puts sanctions to try and de-escalate it with Russia?
Well, if you talk to people like Mike McFaul, the former U.S. ambassador to Russia, and other longstanding Russian security experts, they always point out, and I agree with this, that the way to really get Putin to de-escalate, to reverse this buildup, is by a show of strength. And this is exactly what the U.S. and the EU are trying to communicate. But you asked about what would be the most elegant solution. I think what would be by far the most interesting and also plausible outcome for de-escalating would actually be for Russia and Ukraine to coordinate on a solution. Let's remember that neither side has fully implemented the conditions of the Minsk agreement that transpired after the 2014 Russian invasion. Zelensky has been sending mixed messages. The Ukrainian president, as you mentioned, the Ukrainians have been at pains to say that they're not concerned, but they have to be concerned as further Russian troops are added on both the Russian side of their border and the Belarusian side.
So a solution could come from direct talks between Kiev and Moscow. What do you put at the moment, the risk assessment of significant military action by Russia, given everything that we've seen over the last few days, Tina?
Well, it depends on kind of which hat I'm using to think about it. I mean, I'm a 25-year Russia watcher and also have experience in the security sphere. And so with that in mind, we are obviously looking at the biggest troop buildup and potential risk of military confrontation in Europe for a very long time. It is not insignificant, and I've been advising my clients, Avonhurst clients, and the other senior leaders I talked to about this for well over a year. It seemed clear to me for some time that Putin was going to take advantage of the post-pandemic kind of power vacuum, the kind of erosion in coordination between the international community that's taken place. And he is indeed doing that. He was taking a risk to see if the U.S., in its focus on internal affairs and ahead of midterms, would be willing to respond, and if the U.S. and the EU would be able to coordinate. And then, of course, we have the UK post-Brexit. So he's very much testing that. When I talk to investors, they see it differently. Sorry.
Yeah, no, and Tina, I guess my question is, because this is, it's drip feed of news of Russia saying we will attack. I mean, saying we won't attack, but actually pointing to the fact that they'll attack. They've lost the element of surprise. So do they want to invade or not?
Well, remember Putin's behavior. He has form on this. He has both invaded Ukraine in the past and overseen a troop buildup and withdrawn. So he could easily, I think, withdraw and come away with some victories, right? He's gotten his message out that Russia's security considerations need to be factored in, and the Chinese have backed that up. So he could very well de-escalate, but again, on the military side, there's a lot of material and personnel on those borders, and we should be very concerned. The interesting thing that Maria mentioned about the sanctions, are they going to be enough to change behavior? Probably not, but that's not the purpose of sanctions. The purpose of sanctions is to impose costs.
Okay, Tina, you touched on this, but let's unpack it a little bit more. To be clear, you think markets and investors are underestimating the risk at this point?
Well, so if you are directly exposed to Russia or a holder of EM debt in that part of the world, of course you're concerned, and those areas have taken a hit. The ruble has taken a hit. What I think is not appreciated at this point is the wider systemic implications of, let's say, a disruption in the European gas supplies. I don't think that's very likely, but we would see a gas price hike. And in this tightening environment, inflationary environment, that would have more of an impact for markets than it might have had, 2 years ago.
Tina, is there a timeline in which actually the market is discounting this because we've talked about it so much, or is there a timeline in which the market would move, and what would move in the markets if we were to see an invasion? It's unclear exactly if there would be retaliation from NATO or whether the West actually has their hands tied on what they can do.
Markets are much more sanguine about conflict than security professionals, for what it's worth, and they are banking on if there is a confrontation, that it will be a limited one. And let's remember that Article 5, NATO Article 5 protections don't extend to Ukraine. The U.S. has been very consistent in telegraphing that there would be no military response. And with that in mind, I think the expectation is of sanctions in the event of conflict, and if there is a confrontation, that it would be limited, as we saw in the past. You have got other voices saying that Russia has built up its positions enough to possibly take a lot more territory, and that is not priced in.
Okay, excellent insights as ever, Tina Fordham. We'll have to get you back on to call back the global implications of this as well another time. We've run out of time for now. Head of Global Political Strategy at Avonhurst. Thank you very much indeed. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Joe Rogan has pledged more balance and better research for his podcast in an apology aimed at quelling controversy about misleading vaccine information. Some artists, including Neil Young and Johnny Mitchell, pulled their music over Rogan's show, which has hosted vaccine skeptics. Spotify has now published internal rules stating what is and is not allowed on the platform. Socialist Prime Minister Antonio Costa has won Portugal's general election and will now have an absolute majority in Parliament. Costa, who has been Prime Minister since 2015, has pledged budget discipline, stability and higher household incomes as Portugal looks to recover from the pandemic. The US has reiterated it's ready to hold talks with North Korea without preconditions. That's after Kim Jong-un's regime fired an intermediate-range ballistic missile for the first time since 2017. The weapon is thought to have reached an altitude of more than 2,000 kilometers, flying for 30 minutes. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom Francine.
Laura, thank you. Okay, coming up, everything changes, nothing changes. Italy maintains political stability with both President and Prime Minister staying in their jobs. We will be back live in Rome next. This is Bloomberg.
Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story.
How
are you thinking about those dynamics?
Welcome back to the Open. We are 45 minutes into the European trading day. Gains of about 1% across the benchmark. You're seeing every sector apart from one in the green. Technology up 2.7%, a catch-up with the gains that we saw in Wall Street. Treasuries, not a lot of movement there. Your euro dollar is stronger by about 0.2%, currently at 111. And some solid gains in Italy. 1.7% on the FTSE MIB, and part of that, of course, is down to the political stability that we're seeing. Let's get back out to Francine Lacqua, who's been monitoring this for us, of course, on the ground in Rome, doing her bit as well to boost the economy there of Italy with her imbibing of espressos. Francine.
I have. Yeah. I was going to say, Tom, that GDP flying just because I'm drinking so many espressos while in Rome. Now, Italy finally deciding on the leadership after a pretty chaotic week. Sergio Mattarella will stay on as head of state. Mario Draghi remains, we think, as prime minister. Now, it's a surprising outcome, but it should maintain political stability, especially in the short term, and that pushes away the prospect of a new election until spring 2023. Now, joining us now to talk about all of this is Valentina Miliciani from Lewis University's School of European Political Economy. Thank you so much for joining us. A lot to talk about, but I guess we start with the dysfunction. The market takes this as positive news. What I saw last week was actually political indecision, dysfunctionality. So what does it mean, how Mario Draghi can govern from now on?
Yeah, thank you for this question. I think that this is really very important because we are facing a period in which there are many, many challenges for our country. The health problems linked to the pandemic and most of all the economic recovery. We had a 2021 that was going quite well in terms of economic growth, and we want to continue on that track. So the idea of continuity, of stability is really very important for our country.
Do you think Mario Draghi will actually change the way he governs? So far, he listens to everyone but then does what he wants. Because he now wants the presidency and didn't get it this time round, will he be much more accommodating to the political factions? And so is there a danger that he doesn't have as strong as, a handhold as he did in the last 11 months?
I don't think so. I think that Mario Draghi has a very strong reputation all over the world. He has acted as the president of the European Central Bank, and I don't really think that he will go in the direction that the different parties want him to go, also because they are divided, and so we really need a strong leadership, and I think he will play this role.
So are you expecting stability and access to the EU funds until spring 2023? When we have legislative elections, and how messy could those be?
Yeah, I think we have so many deadlines. We approved with Draghi as president of as Prime Minister, we approved the National Plan for Recovery and Resilience, and now we have more than 100 deadlines in the following year, targets and milestones. That means projects and reforms. Yeah. And so I think that this stability will help us to carry out all these. I mean, there will be some problems because, as we are approaching the elections, the political parties, they want to follow their
electorate, right?
Yeah, their electorates. Sure, right. And in these, I mean, they are very, very divided because the electorate are very different one from the other.
So, Dean, would you say that Mario Draghi has had too easy a time so far to push the reforms through? Because mainly the party said, well, let's Mario Draghi do the tough decisions. We don't have an election. We can just sit here and wait. And now they're going to say, no, we don't want this reform. So actually the next 10 months are going to be more difficult for Mario Draghi.
Yes, it is a danger, but I think that the other option was even more dangerous because as another option, we just had that this government would fall and then there would be a lot of pessimism. It would be a problem of an increase in interest rates. We have a very high public debt, so we were not really in the political position to be ready to go into elections right now. So I think that this choice that the parliament at the end was able to take drives the country in the right direction.
But it just pushes, I guess, the tough decisions further down the road. So you could see a monument where, for example, the ECB stops buying Italian bonds, we go into elections, and it's chaos again.
Yeah, I mean, we are a country with a very high public debt, so there is always the danger of the lack of support from the financial markets. But I think that having Mattarella as President of the Republic, who will also, he has an important role when we will need to find a new Prime Minister, and therefore I think that this will guarantee enough stability for avoiding these kind of dangers.
Thank you so much, Dean. Of course, Valentina Meliciano there from Lewis University. We'll have plenty more from Rome throughout the day, Tom.
On the ground for us, unpicking the political implications of what is happening in Italy. Coming up, are we headed for $100 oil, currently at $90? Chevron CEO Mike Wirth shares his views on the price of crude. That conversation is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Our shareholders really value the dividend. We have a robust capital program, which is down significantly from what it was just a few years ago. Very disciplined reinvestment to generate those future cash flows, a strong balance sheet. And then we have, in this environment, cash that's surplus to those needs. And we've got a history of returning that through share repurchases. We've actually repurchased shares 15 of the last 19 years. And so our investors understand our track record, and I think this is very consistent with what they expect to see.
Obviously, the run-up in your share price also has to do a lot with the run-up we've seen in oil. Brent, $91 a barrel, at WTI, $88 a barrel. Do you anticipate $100 oil, and in what time frame?
Well, Kayleigh, it's predicting oil prices is fraught with difficulty. We are in what has been an up market here now as the economy grows and we begin to put the pandemic behind us. And we've seen demand growth very strong, even before we see people returning to normal office commutes, international travel, or business travel returning to pre-pandemic levels. So demand has been strong. Supply has been struggling a little bit to keep up with that, and that's reflected in the market. And then, of course, we also have geopolitics that are present again. A few years ago, these types of events didn't seem to really impact commodity markets, and today they appear to be doing so. And so, $100 is certainly within the realm of what we could see in the next few months. Longer term, we think markets rebalance and prices will moderate.
You may get some extra production coming on stream, Mike, if we get to 100. Not saying you, but others might decide to make that decision. The word discipline is the word that I've heard most when I talk to energy CEOs at the moment. Every conversation I have seems to include the word discipline. Do you think that discipline is maintained? What are your plans going forward? If we get to $100 a barrel, what do your plans look like in the Permian? Are you going to be increasing production? How do you see the landscape developing?
Well, our production in 2021 was a record. It's the highest it's ever been. Permian was up 10% just quarter on quarter as we closed the year. And as we look to 2022, we've got a couple of big contracts in Asia that expire. And if you set those aside, we'll grow again 2 to 5% in 2022. So we're responding to the demand in markets, but we're doing it with capital discipline. That's a key word.
And that was the CEO of Chevron. Currently, Brent oil at $91 a barrel, WTI at 87.78. And across your European markets, you're seeing a more convincing set of gains, up 1.2%, led by Italy, gains of 1.8%. That is it for the European market open. Surveillance early edition is up next. Stay with us. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
$100 is certainly within the realm of what we could see.
This is larger in scale and scope and the massing of forces than anything we have seen in recent memory.
If they use military force against Ukraine, it will have severe consequences.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome, looking at the political fallout after the vote, stability in the markets for the moment, but for how long? Now, here's what's coming up on today's program. The plot thickens. Raphael Bostic says the FOMC could raise by 50 basis points in March. Goldman now sees 5 Fed hikes in 2022. Italy re-elects Mattarella as president. Draghi stays prime minister. Bonds rally and spreads tighten. And Spotify adds COVID notices in an effort to stop a growing controversy over its support for podcast host Joe Rogan. Now, quite a lot going on in the markets. Huge central bank week. We have the Bank of England and the ECB. So first thing is first, so let's check in on the markets. And here's our Danny Berger in London. Danny, a lot of talk about hikes from the BOE and from the Fed.
There really is, and it's this idea that we might have even more of a hawkish Fed after Bostic in the weekend, speaking to the FT, said that we could see a 0.5 percentage point hike to really help combat inflation. That's where you see really the action on the front end of the curve. We're looking at 2-year yields up 3 basis points. We're looking at a yield curve for 2s, 10s at its flattest since 2020. So all of that action taking place on the front end of the curve, but for stocks more sanguine this morning, Europe having to play a catch-up rally with the U.S. after it staged this huge rebound. We saw tech stocks ending up some 3% on Friday. Tech outperforming, I should say, in the U.S. futures session so far this morning. It is generally risk on, so we have oil also outperforming, up 1%, trading at its highest since 2014. Also some geopolitical concerns when it comes to Russia, Ukraine, helping with oil prices as well. So while bond selling might be in, for example, we're also looking at JGBs, those yields for 10 years at their highest since 2016. Bond buying is the story for Italy. The stability, which you are seeing there in Fran with Mario Draghi still as prime minister, Mattarella staying on as president, means that we are seeing a flood into BTPs. In fact, the spread between BTPs and bonds now seeing their biggest shrinking since June of 2020. Let's look at the stock picture through all of Europe. We're seeing mostly green when it comes to the map markets go function on your Bloomberg terminal. Again, it is Italy outperforming, that political risk now being taken off the table, those gaining more than 1.6%. strength being led by Italian banks, really those politically sensitive type sectors. Seeing a little bit of underperformance from the FTSE 100. We're looking at travel and leisure, that area outperforming. Ryanair, a little bit of disappointment in their earnings. Materials also underperforming, so only up about 0.4% for UK stocks. But it is tech, much like the US, that is outperforming. So we're seeing the DAX up 1.5%, Francine.
Yeah, Danny, thank you so much for all of the market action. Now let's focus on the Fed, with the markets, of course, eyeing a more hawkish stance. This is after the chair, Jay Powell, indicated that the door remains open to faster hikes to tame inflation. Now, for more on all of this, we're joined by Head of Policy Research and ESG at Algebris, Silvia Merler, along with Bloomberg's Markets Editor, Christine Aquino. So thank you both for joining us. Christine, we could see further repricing, especially after Goldman Sachs also raised the number of hikes they're expecting this year, but the market's pretty calm today.
Absolutely, Francine. I think they really are just taking stock of what we saw last week in terms of price action and also in terms of that hawkish surprise from the Fed. And again, we're still in this environment where markets are kind of hesitant to believe what we're hearing from FOMC members, such as what we heard from Bostic, for instance, with the possibility of 50 basis points in March. I think that's partly because of the fact that Bostic has been known to be a hawk, and also he's not a voter this year. So, you know, once we hear more FOMC members kind of singing the same tune, particularly those that markets tend to really pay attention to, such as Bullard, then we could potentially see a repricing of that 50 basis point possibility in March. And it's a long road to March, Francine. It's only the end of January, so we have a lot of opportunities to hear from Fed speakers between now and then.
I know, it feels like a lifetime away, and yet it's around the corner. Sylvia, how many Fed hikes are you expecting? And actually, there does seem to be a realization that instead of the 25 basis points drip feed hikes that we could see, that the Fed would go quite heavy-handed at first, and then see how inflation plays out.
Yes, absolutely. So our view has been consistently throughout 2021 that central banks in major developed markets were behind the curve in fighting inflation. It's been a contrarian view for a considerable part of the year, not contrarian anymore. Our latest macro view is that on the U.S. side, we think the Fed might have to hike more than 4 times, which is in line with recent commentary that you mentioned to tame inflation. And ultimately, the outcome will depend on the interaction of 2 forces, Chinese growth on one end and economic bottlenecks on the other end. So in our best case, if we do see a bit more Chinese stimulus and easing of economic bottlenecks, then the Fed might stop at 4 or 5 hikes, with China helping global growth a little bit, and a supply bottlenecks taking away the pressure from inflation.
And Christine, there's a school of thought which some market participants think that actually if you do 50 basis points, then it takes care of inflation in the shorter term. And then if inflation also stabilizes, it means that the Fed could be seen as dovish, which would be supportive for the markets. I mean, is that maybe what we could be seeing? Would it be the most elegant way to deal with inflation, where we don't exactly know what happens to bottlenecks or supply chains by mid-2022?
Well, Francine, I think this is why we're seeing this pressure on the Fed, especially in the near term, is precisely because of what we've been seeing in terms of the inflationary pressures, both from the bottlenecks and supply chain issues, as well as higher energy prices and higher food prices and the like. These are near-term issues that the Fed is really being pushed by markets to react to. And investors are kind of expecting the same thing as well. But you're absolutely right, Francine. I think it really also matters in terms of what markets are pricing further down the line for the Fed, and you know that tells us what they're thinking in terms of how they're interpreting earlier and faster Fed hikes, and how that's going to be impacting the longer-term growth and inflation picture, and whether there is potential for a policy mistake here if the Fed goes too fast and too quick at the front end, and then it ends up hurting economic growth in the long run. And so, yeah, beyond pricing for March, I'd definitely be watching for pricing for the year end as well. Again, the question of 5 rate hikes, and further down the line, about a year and a half from now, when markets are starting to price in a cut after a series of hikes from the Fed.
Sylvia, what does a policy mistake look like in your eyes right now? Is the worst of 2 evils hiking less to make sure that we don't go back into a recession, or the other way around?
I think the biggest policy mistake from my point of view would be to underestimate the complexity and the volatility that may come from a series of very unusual factors that are combining, including geopolitics, which has a bearing on energy prices. This is particularly the case in Europe, perhaps more than it is in the US. Inflation in Europe is different than inflation that we're seeing in the US. But all these factors combined together, so geopolitics on one end, supply chain on the other end, which might actually turn structural if we do see really a walk back from the kind of globalization dynamics that we have seen over the past decades, and at the same time, the complexity of the political landscape in some of the countries that we're talking about. I think all this combined makes the outlook very complex to interpret.
All right, thank you both for joining us. Christina Kino, of course, our markets editor, and Silvia Merler, head of policy research and ESG at Algebris, stays with us, and we'll talk about Italy and maybe a little bit of Bank of England as well. Coming up, everything changes, but nothing changes. Italy, of course, maintains political stability with both president and PM staying in their jobs. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix in Rome. Now, Italy has finally decided on its leadership after a chaotic week. Sergio Mattarella will stay on as head of state. Mario Draghi remains as prime minister. Now, it's a surprising outcome, but it should maintain political stability, pushing away the prospect of new elections anytime soon. Well, still with us, Silvia Merler, head of policy research and ESG at Algebris, and Christina Kino, our markets editor. Silvia, thank you so much. Well, thank you both, actually, for staying with us. But Silvia, it does seem that the market liked this relative stability in Italy. The president who did not want to stay is staying on. The prime minister who wanted to become president stays on as prime minister. But it also shows quite a lot of political dysfunction in Italy. Are we underestimating the impact that this could have as we get into elections in 2023?
Definitely. I think on the short end, this is a very positive outcome, and market reaction seems to agree. Obviously, Italy retains an excellent president of the Republic, even though he very clearly and very explicitly said he had other plans, and also constitutionally, the prolongation of mandate should have remained an exception. And of course, it's also avoided the worst case, so to have very high volatility on the figure of the prime minister in a year, which is really key to the implementation of the National Recovery and Resilience Plan, which is the plan on which the European funds depend for Italy, which is one of the biggest recipients. So obviously this is a very good outcome in terms of the short term, but it really speaks volumes about the bad health and dysfunctional dynamics in the political party system in Italy, which may become a problem further down the road, particularly as we approach election next year.
Yeah, and Christine, I guess, the main $1 trillion question is, of course, when the ECB stops buying some of these bonds, who will step in and buy them, especially if we have political turmoil. What are we actually expecting from ECB this week?
Well, Francine, of course, we're expecting to hear once again their plans for the rest of the year. We know that the emergency purchase program is due to end in March, but of course, all eyes will be on their regular asset purchase program and the fate of that. I think the expectations at the moment are for that to end by December of this year. And then at that point, we could start talking about the potential for rate hikes. Of course, that is if things go the way of the ECB, but markets have a completely different thought altogether. We are, of course, seeing pricing for ECB rate hikes as soon as September or October time this year. As far as the Italy election results go, I mean, as Sylvia was pointing out, it is, of course, a short-term positive. But Francine, you are asking some very, very good questions here in terms of what this means for the longer-term stability of the country, especially when you have a president that was planning to not become president anymore staying on, and a prime minister who wanted to be president staying on as prime minister. I mean, those will have longer-term implications that markets will probably have to look at some point.
Yeah, and I guess, Sylvia, to follow on from that, right, there are two main points that maybe the markets are misunderstanding. First of all, it gives the President Mattarella so much power that he will effectively decide to resign that would influence who would become prime minister, because it's unlikely that he'll serve his 7-year term. And whether Mario Draghi either changes the way he, is in charge of cabinet because he wants to be elected, or whether because they're eyeing the election 2023, the parties just won't go along with the reforms Mario Draghi wants.
Exactly. So this government started already weakening in the latest months of 2021. We have seen that in a series of discussions on potential restriction related to COVID and vaccine obligations across the country in the past few months. So it was already on a trajectory whereby you could see political parties who are not so happy to comply anymore, and this might accelerate as we enter what political parties perceive as campaigning period leading up to the 2023 election. So that's definitely one risk. A risk to implementation of the National Recovery Plan, which is what Draghi's legacy as head of government depend. And with it, also, obviously, the likelihood of Draghi being candidate for any of the top jobs that open up in 2023, 2024. Some are saying Mattarella might resign early, so Draghi might have a second shot at the presidency. I think that's unlikely also because it's unlikely the president would resign before the elections, and the elections would deliver a very different parliament if we believe the polls that we currently are seeing, a parliament far more tilted to the right, which wouldn't seem to be the perfect fit for a Draghi presidency. Yeah. But there might be the European Commissioner's top job opening up in 2024. So, of course, this 1 year and a half is really key for Italy on one end and Draghi's political prospects on the other end.
Yeah. Sylvia, thank you so much for all of your insights. Sylvia Merler, their head of policy research and ESG at Algebris, and Christine Aquino, our markets editor. Now let's get straight to the Bloomberg. First word news in London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. US senators are said to be nearing an agreement on a Russian sanction bill that could include penalties even if Moscow does not send troops into Ukraine. Foreign Relations Committee Chair Bob Mendes says restrictions could be applied based on what the Kremlin has already done. Meanwhile, the UK is reportedly looking for ways to target the wealth of Russian oligarchs held in the London property market. Now, Socialist Prime Minister Antonio Costa has won Portugal's general election and will now have an absolute majority in Parliament. Costa, who has been Prime Minister since 2015, has pledged budget discipline, stability and higher household incomes as Portugal looks to recover from the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, Spotify announces plans to clamp down on COVID misinformation after artists pull their music from the platform in protest. We'll bring you that story next. This is Bloomberg.
Season is here.
It has been brutal. A little bit of disappointment in some of the early reporting.
Nasdaq 100 on pace for its worst month since March 2020.
Bloomberg breaks the numbers first.
Netflix, of course, is the stock of the hour.
A pretty big miss.
This is a mighty crash.
An expert analysis you won't get anywhere else.
The banks is potentially a bad bellwether.
Not only are you not getting incremental earnings growth, you're getting reduction in earnings growth.
What to buy and what to run away from.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's talk about Spotify. Joe Rogan has apologized and pledged more balance after a controversy over his podcast on Spotify. Singers Neil Young and Joni Mitchell pulled their music from the streaming service last week in protest at Spotify's support for Rogan. Well, the platform has announced it will add advisory warnings to any podcast that discusses COVID-19. The row saw almost $4 billion wiped from Spotify's market value last week. So let's get more on this. For the details is Bloomberg's Laura Wright. So Laura, is this likely to actually stop the boycotts, or is there more trouble ahead over Joe Rogan?
Well, Joe Rogan apologized, Francine. It was a lengthy video on Instagram apologizing to anyone whom he'd caused offense, apologizing to Spotify. We're seeing a slight lift to Spotify in pre-market trading, a relief for investors after a torrid 5 trading sessions. Frankly, most artists cannot afford to boycott Spotify because they rely on royalties in order to provide a living. Now, the Rogan Experience podcast has been fundamental for Spotify's pivot, gaining extra market share. It's the next frontier for investors. Ostensibly, the Rogan Experience has 200 million listeners every month. That's why Spotify paid a premium for its exclusivity, paying up $100 million back in 2020.
So, Laura, will this push Spotify and other platforms to be more open about their content policies? I mean, it basically gives them, they're now publishers.
So in a blog post, Spotify say they want to be more transparent. Traditionally, Spotify took a more laissez-faire approach to content. It appears that position has changed. A tweet from the CEO, Daniel Ek, he acknowledged the criticism that the streaming platform had faced. And look, they're following platform rules focusing on what is considered to be dangerous, deceptive, sensitive, illegal. In the future, all podcasts must adhere to these new rules and with this content advisory. So we know the Rogan Experience podcast, it is here to stay, but all podcasts will have to be more balanced in the future so that they can be acceptable for all listeners.
Laura, thank you so much. Our Laura right there looking at Spotify. Now, coming up, we'll have plenty more from Italy. We're live here in Rome. It's cold, but at least there's less political uncertainty. Mario Draghi will remain as the Italian Prime Minister. We'll be speaking to the President of the Italian Finance Commission. He's Luigi Marattin. Now, the thinking goes that actually markets at the moment like the status quo. President Mattarella was asked to stay on, despite him saying he wanted to retire, despite him saying multiple times that he did not want a second term and that he even actually was flat hunting. Despite that, he stays as president of the Republic. Italian Prime Minister Mario Draghi stays on as Prime Minister. But for how long can we have this stability, and what does it mean for access to the EU funds? That's the main question that we'll be asking ourselves shortly. Overall, the markets, and a lot of focus actually this week on what central banks will do. The markets pretty much, I don't know if it's euphoric, but certainly they're not too worried about that extra call from Goldman Sachs saying that the Fed will maybe hike more than expected. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The plot thickens. Raphael Bostic says the FOMC could raise by 50 basis points in March. Goldman now sees 5 Fed hikes in 2022. Italy re-elects Mattarella as president. Draghi stays on as prime minister. Bonds rally and spreads tighten. And of course, we look at geopolitics. Sanctions in the spotlight. The U.S. Senate moves forward with a bill that could penalize Russia, even if Vladimir Putin does not invade Ukraine. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome for the final day of coverage after we saw, finally, a result over the weekend. The president stays on, as does the prime minister. Now, let's check in on the markets. Here in London is our Danny Berger. Danny, it's all about central banks and actually a repricing of how many times the Fed could hike on the back of that Goldman note.
Exactly. We're seeing now about 31 basis points priced in for March. Of course, the Fed only hikes in increments of 25, so that does imply a non-zero probability, at least according to the markets, that we get that 50 basis point hike come March. Meanwhile, though, it is the story of playing catch up with what U.S. markets did on Friday. We're looking at Europe, stock 600 up more than 1%. We saw this huge turnaround in U.S. equities on Friday. NASDAQ tech stocks ending up more than 3%. So in the European session, it is tech that is leading the way. Now, it's broadly risk on. We're seeing commodities, for example, also perform well. NYMEX crude at its highest since 2014. Of course, optimism about demand, as well as some geopolitical concerns, Russia, Ukraine feeding into higher oil prices. So the 2-year yield really is where we see that action, Francine, that you're talking about, pricing in a more aggressive Fed. So for those who had expected a curve flattening, that's not what we're getting just because of the muted action on the long end. 2-year yields up 3 basis points. So it is all about bond selling globally, but for Italy, BTP 10-year yields moving lower by about 5 basis points. Buying here means that the spread between Italy and Germany has shrunk the most since June of 2020. And of course, Francine, all of this off the back of status quo for Italy, at least for now, with the same president and prime minister sticking around.
Yeah, stability for the markets, but I wonder how short-lived it will be. Our Danny Berger there with the latest market action. Now, joining us now is Luigi Maratin, president of the Italian Finance Commissioner. Mr. Maratin, thank you for joining us. It has been quite a whirlwind weekend, and we're back to status quo, something that the markets like. But do you worry that Mario Draghi will now be less powerful to lead and to make sure that the reforms that Italy needs will be pushed through?
Well, stability now is our greatest asset, so that's why the market are reacting very well, because confirming President Mattarella and having Mario Draghi staying on means stability, and now this country needs stability. As far as whether Mario Draghi will be stronger or weaker, it depends on the political landscape. The center-right coalition is in pieces, and there are doubts about also the center-left coalition. But we know that Mario Draghi government is a national unity coalition, so it basically depends on how much political parties will be willing to engage themselves into the prosecution of the reform agenda, or they will start the electoral campaign 1 year earlier.
Yeah. And Mr. Martin, that is actually the most crucial question for the markets. So far, Mario Draghi has benefited from parties that have gone along with what he wanted because the elections were pushed back. If we have elections in spring 2023, when will the political parties start going against Mario Draghi because they want to win electors' hearts instead?
Well, it depends on whether the political parties will realize that their ability to succeed in next election relies on them supporting Mario Draghi as much as they can. That's the point. If they see their personal success as the more we fight Mario Draghi, the more we gain consensus, then we are in trouble. If, as I believe it will happen, political parties will realize that the only chance to succeed is to show very much support of Mario Draghi reform agenda, then actually this remaining year will be the most important one because the reform agenda can actually be implemented like we never did in our last 30 years.
Yeah. What's the reform that will be most difficult for actually Mario Draghi to push through? And is there one that could also put the EU recovery risk funds at risk?
A couple of lists. The competition law. This country doesn't like competition very much. So the competition law that Mario Draghi put forward a couple of months ago is at the Senate now, and we'll see what happens. And the other one is the fiscal reform, which is actually the one in my commission at the moment. We have very high expectations about the fiscal reform. The last reform in this country was 50 years ago. And our fiscal system really needs to be made more light and more simple. So if you ask me, I would say that these two reforms, competition law and fiscal reform, are the key in the next week to understand which way political parties will go, whether the first one I was outlining or the second one, which is the one I really hope it will be chosen by them, by us, actually.
Yeah, Luigi, I understand that, Italy, or at least lawmakers, are saying they voted for stability. But after 8 votes, a week-long process where we end up where we started, which is an 80-year-old president who did not want to be reelected, who was flat-searching, I mean, does the electoral system really need to be reformed? Does it not point also to, chaotic and dysfunctional Italian politics in the way people are voted in?
Well, there are many reforms that are needed in Italian politics. I will say that we need an electoral reform for the general elections, not for the President of the Republic. And we very much need that. In the last 25 years, we changed the electoral law every 3-4 years. We need a stable electoral law. In my opinion, we need to turn to the 2 models which actually worked in Europe, either the French model or the German model, so the majoritarian double ballots or the proportional system. But again, it relies on how much political parties realize that the actions that they need to take in this following 12 months are the actions to give Italy political stability and economic competitiveness, and not electoral consensus for the short term.
Yeah. And the main problem is, of course, when the ECB stops buying Italian bonds. Do political parties in Europe realize that they need to get their act together? Because when the ECB is not there, it's unclear who will buy Italian bonds.
I hope so. The thing is, this parliament was elected in 2018, very different political era. It was a populist majority in this parliament. Is still there. I mean, in this last week, we risked a different outcome for the presidency of the Republic. So my opinion is that we are not in 2018 anymore. So political parties are grown up, especially the 5-star movement. But of course, again, in the next 12 months, we'll have a confirmation of whether that is true or it's just a hopeful expectation.
Luigi, very quickly, what is the one thing that actually markets need to be wary of right now? I know that there's stability in the short term, but is there a danger that markets are too complacent and therefore don't put that pressure on politicians in Italy that is needed?
No, well, I mean, maybe we should really give a close look to the electoral law. Because if we manage to reform the electoral law in the next couple of months, because this is the time horizon, then it means that Italy is going towards a stability path. Otherwise, if we engage ourselves in many sorts of, I don't know, political fighting, then probably we didn't learn the lessons like we should do.
All right, thank you so much for joining us today. Luigi Maratin, they're president of the Italian Finance Commission. Now, we'll have plenty more, of course, on Italy, on geopolitics, restrictions on Russia as well. Moscow continues to boost troops along Ukraine's borders. The U.S. is also close to agreeing on a sanctions bill that could penalize Moscow. So we'll talk about game theory and how it's possible, if it's possible, to de-escalate. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, let's talk geopolitics. And Russia continues to boost troops along Ukraine's borders, according to the Pentagon, with reports suggesting it's also started to deploy supplies of blood and medical equipment seen as a key step for combat readiness. Meanwhile, the U.S. and Europe are also zeroing in on a new package of sanctions. Now, for more, we go to our reporter in Brussels, Maria Tadeo. So, Maria, first of all, is the risk of invasion quite high, or is there an elegant way that especially the president of Ukraine can try and de-escalate this by talking directly to Russia?
Well, you know, Francine, on paper, to answer that question, nothing has changed from a week ago and nothing has really changed from a month ago. The United States say that they see a risk of an imminent invasion. The Ukrainian president, as you mentioned there, Volodymyr Zelensky, he says that all of this is creating panic in the country and he doesn't see anything changed from the 100,000 troops that have been stationed in the Ukrainian border for months. And Russia says, well, we're not intending on invading the country. But in reality, Francine, the Ukrainians do have an interest in trying to play down the risk of war. We know the country's already hurting from all of this instability. And at the same time, there was this report on Friday, which you alluded to, which suggests that Russia is not just sending military equipment, but it's also sending medical equipment. And that would show that the country is indeed ready for combat. So that was something that really sent alarm bells going on Friday.
Maria, what does this mean going forward? Is there a timeline by which, if Russia doesn't invade, we think that it was a bluff?
Well, you know, Francine, that is unclear, and it's really the big question. What is on the mind of Vladimir Putin? Is he intending on attacking Ukraine or not? The reality is, with 100,000 men stationed in the Ukrainian border, at one point you have to do something with them. You either pull them back or you engage them in combat. In terms of the timeline, however, though, there is still time to be played here. Remember, Vladimir Putin said he had received the letters from NATO and the United States, that he would read them in detail and then respond and make a decision. At the same time, we now have confirmation that the German foreign minister and the French foreign minister will be in Ukraine next Monday and Tuesday. Another detail that really caught my eye, Francine, on Friday, I waited until 9 p.m. to get a readout of the French call between Vladimir Putin and President Emmanuel Macron. There was nothing from the French side. Remember, they initiated this call, but in the end, it does seem that it didn't go anywhere.
Great. Maria Tadeo in Brussels, thank you so much. And of course, we'll be monitoring the situation across the border. Now, oil heading for its best January in decades. Natural gas continues to be in the limelight, and more widely, commodities continue to push higher. Now, of course, it's common for energy, but also other natural resources to be watched following geopolitical events. But what about the effect that these markets themselves have on geopolitical events? Well, my next guest is Rupert Russell. He's a writer, director, and author of Price Wars, How Chaotic Markets Are Creating a Chaotic World. Now, his book looks at how speculation on the commodities markets and the resulting price shocks are responsible for triggering local disasters that have become then global catastrophes. Well, we're joined by Rupert Russell. Rupert, thank you so much for joining us. Congratulations on, of course, your new book, Price Wars. I think it's your first book. I mean, what exactly did you find out which is new? We always knew that oil and actually a lot of the commodities are used to influence geopolitics, which leads to chaos. I mean, a number of wars have proven that. Are you saying it's the traders' fault, or is it geopolitics and the heads of state?
The story looks at the last 10 years. So I look since the financial crisis, and I tell the story of speculative shocks on prices, the conflicts they create. But I think the new piece of this is the feedback loop. So it's not simply that you have price shocks, funding and triggering wars, funding and triggering food price riots, such as the Arab Spring and elsewhere, but those very political events then get priced back into the markets. I was just hearing earlier in your program about how the troop buildup on Ukraine's border is now being priced back into the oil markets. And so really what you have is the markets functioning as an engine of chaos. They create chaos in the real world, and then that very real world chaos gets priced into the markets. And so you get these escalating cascades of chaos. And that's why the last 10 years has seen so many wars, the global refugee crisis, and even the current crisis today.
But when you look at the refugee crisis, I mean, how much does it have to do with displacement and wars directly linked to the price of oil? I mean, there are parts, of course, in the world, I'm thinking of, many states actually in the Middle East, where they just don't have the oil to make that happen.
So the global refugee crisis hits Europe 2015, 2016, but it begins much earlier than that with the Arab Spring revolutions. So in 2010, 2011, you had a massive price shock on food prices. Some of this was based on fears that Russia wasn't going to have enough wheat, basically, because there were wildfires. But like with many price shocks that are priced in by speculators, the reality was quite different. In 2010, we actually had more food produced in the world than ever before in history. But nevertheless, food prices doubled globally anyway. And the Middle East imports much of its food, much of its grain. People are very reliant on wheat. And this triggered political unrest. This sparked the Arab Spring, this created civil wars, Libya, Yemen, Syria. And then by 2015, you've got the global refugee crisis hitting Europe. On oil, you've got the collapse of oil prices in 2014. And then with the drop in that price, you see essentially the collapse of the Venezuelan economy, politics, and society. And since then, about 5 million Venezuelans have left that country to neighboring states.
Yeah, so Rupert, how much does the shift, as we shift into more renewables and actually get away from oil, does copper become that linchpin? Are we going to see a similar pattern going forward?
It's a really good question. We could see that with lithium as well. We could definitely see new commodities having big impacts in the local places that they're manufactured, but hopefully not. That's what I hope. I mean, food and oil have absolutely massively outsized impacts. Obviously, we all need to eat. Oil's hugely important in some very sensitive parts of the world, not just the Middle East, but also Central Asia and South America. So I personally hope that as we move to renewables, we'll see less of these chaotic price shocks.
I know there's been a number, of course, of books on the greediness of traders and the murky also way that commodities are traded. There was a Javier Blas with Mr. Farkey book. There's your book. Does it actually make a difference to how these markets are regulated?
Regulation is absolutely key to this. So in 2000, there was the Commodity Futures Modernization Act. And before that act was passed in 2000, signed into law by Bill Clinton and partly written by Alan Greenspan and Larry Summers, physical traders made up around 80% of these markets. They call it open interest. So that's people trading, buying and selling real barrels of oil. After 2000, you begin to see those numbers sort of reverse. So the physical traders end up being around 20% of the market, and speculators end up being around 80 to 90% of open interest. So it's really transformed the markets completely.
Rupert, thank you so much. Rupert Russell, there, author of Price Wars. Now, coming up, we'll be back here in Rome to look at the political implications of the status quo. We'll look at what markets are saying. For the moment, they're pretty optimistic, but for how long? We'll have a full roundup of Mario Draghi staying on as Prime Minister. This is Bloomberg.
What would you like to achieve next in Saudi Arabia?
As you know, Barrick has invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company, and we have an investment in the Jabal Sayid copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly, to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
You also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Now, Italy maintains political stability with a compromise vote for President Sergio Mattarella, but the chaotic election has also revealed the weaknesses of the parties in the coalition government. Now, it's also exposed Mario Draghi's inexperience in dealing with political cross currents. We'll have plenty more, of course, from Rome. I've been posted here for the week, and it's interesting to see the markets take this on their chin, saying this is good news for stability, but I wonder what comes afterwards. And actually, because of the process, Mario Draghi could be weakened. Now, also, let's get an update on the price of oil. We spoke to the Chevron chief executive. Here he is.
Our shareholders really value the dividend. We have a robust capital program, which is down significantly from what it was just a few years ago. Very disciplined reinvestment to generate those future cash flows, a strong balance sheet. And then we have, in this environment, cash that's surplus to those needs. And we've got a history of returning that through share repurchases. We've actually repurchased shares 15 of the last 19 years. And so our investors understand our track record, and I think this is very consistent with what they expect to see.
Obviously, the run-up in your share price also has to do a lot with the run-up we have seen in oil. Brent, $91 a barrel, at WTI, $88 a barrel. Do you anticipate $100 oil, and in what time frame?
Well, Kaylee, it's predicting oil prices is fraught with difficulty. We are in what has been an up market here now as the economy grows and we begin to put the pandemic behind us. And we've seen demand growth very strong, even before we see people returning to normal office commutes, international travel, or business travel returning to pre-pandemic levels. So demand has been strong. Supply has been struggling a little bit to keep up with that, and that's reflected in the market. And then, of course, we also have, geopolitics that are present again. A few years ago, these types of events didn't seem to really impact commodity markets, and today they appear to be doing so. And so, $100 is certainly, within the realm of what we could see in the next few months. Longer term, we think markets rebalance and prices will moderate.
You may get some extra.
That was the Chevron's chief executive, Mike Wirth, talking about some of the challenges at the moment. We're back in Rome. We're back with our bureau chief, Alessandro Speciale, to talk about the week that was. Alessandro, I mean, it's been a pretty crazy week because they've reelected a president that did not want to be reelected, that did not want a second term, that was actually flat hunting. The market is loving this because there's stability. Are they underestimating the challenges ahead?
Maybe a bit. I mean, it was crazy because in the end, nothing happened. Same president, same prime minister. That's a good sign, but the parties are shattered. Parliament is even more fractured than before, so Draghi may have a hard time passing through the reforms that Italy needs to do to get the EU money, the next generation EU funds, more than 200 billion euros.
Yeah, this is a problem, is that the market seems to say nothing's changed, but actually has Mario Draghi's position significantly weakened?
He has weakened a bit because he wanted the job, he had made it clear, and he didn't get it. Parliament flatly rejected him. At the same time, parties, it was clear they had no alternative, nothing else but Mattarella and Draghi can rule Italy right now, so they have no choice.
Alessandro, very quickly, do you think he listens to everyone but then makes decisions? Will that change because he wants to become president?
I think he's going to be even more assertive. In the last few months, he tried to compromise because he wanted something from the parties. This time, he's going to be much less open to compromise.
I mean, I have to say, a more assertive Mario Draghi is usually good for the markets. Alessandro Speciale there, a Rome bureau chief. Coming up, we'll have plenty more, of course, with Kaylee, Anna, and Matt. This is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The Fed is in a very tight spot.
I like to say the Fed specializes in crowd control. They're coming undone, and they're being compromised by this thing called inflation.
What's important here is how the investor risk appetite has been.
I think it's a bumpy ride, but the fundamentals are not really changed.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, January 31st. Our top stories today. Getting aggressive on inflation. Atlanta Fed President Raphael Bostic says the central bank could raise interest rates a ½ point in March if it's needed. Goldman Sachs sees rapid tightening. The firm's economists now see 5 Fed rate hikes this year and 1% rates in the UK by May. And ramping up the pressure on Russia. A key US senator says an agreement is near on imposing sanctions on Moscow. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And we seem to see evidence of risk appetite. Good morning to you, Kaylee, here in Europe. But we'll see how long that lasts once we get into the US session.
Yeah, if there's anything we've learned over the last week or two, Anna, it's that things can change very, very quickly in these markets. That said, the week did start off on a positive tone in Asia overnight. The MSCI Asia Pacific Index was up about 0.6%. Keep in mind, though, a lot of markets are closed in Asia, including in China, where the Lunar New Year holiday is currently underway. We did have a shortened trading day in Hong Kong, however, and it was really tech stocks leading the way there. The Hang Seng Tech Index up about 2.4%. You're seeing some optimism that maybe the worst of the regulatory crackdown is over after the Cyber Safety Administration in China talked about internet companies being a high-quality backbone for economic development in the country. Now, speaking of economic development in China, we did get some data out overnight as well regarding PMIs. Manufacturing really slowing down as you see the impact of the Omicron variant and that COVID-0 policy really coming to the fore. And as a result, the Chinese yuan is the big underperformer in Asian FX, weaker against the dollar by about 0.2% at 637.95. And then also I would point out China really trying to talk down iron ore prices. Basically, Beijing saying they're paying attention to iron ore that hit the highest in September last week. And as a result, those futures in Singapore fell about 6% overnight, Matt.
Happy New Year, by the way, speaking of
Same to
China.
you.
It's the year of the tiger, about to kick off. Chinese New Year today. S&P futures showing some gains, but we're going to have to do a lot better than this if we want to make January the second worst month since March of 2020. Right now, we're down 7% year to date, and we'd have to climb at least 2.5% to save it from being the worst month since March. The U.S. 10-year yield climbing a little higher as investors let go of some of that debt. So this is a little bit risk on, 177.67. NYMEX crude also up again, 87.26, and we're seeing Brent around 90. So really huge gains for January, and I mean decades, records that we haven't seen for decades. I think 17% is what we've climbed this month, and that's the best in 30 years. Bitcoin right now at 37,224, so down a little bit, but still at that level that's slightly above the range we were watching, Anna, slightly above the 36,000 that we've been watching the last couple of weeks.
Yeah, absolutely. And we watch it as an interesting risk indicator. How is it still January? I'm still surprised at the fact we're not done with January just yet. We're not done with data around the fourth quarter here in Europe either. We just had some data for the euro area economy showing it grew by 0.3% in the fourth quarter. That is a little bit weaker than the estimate of 0.4%. I suppose maybe we're not too surprised given we knew the weakness. The weak spot here was Germany, and we heard a little bit about their growth numbers last week. With that in mind, we're holding on to these gains across European equity markets. In the main, the FTSE looking fairly flat. But where we have technology names, we do see some gains making up for the losses of Friday. And let me show you where we are on the technology sector, because it is the losses on Friday on the NASDAQ, on the technology names in the US that we're catching up with here. So in terms of the risk appetite here in Europe, it is very focused around technology in particular, that sector up by 2.6%. We've talked a lot about bond markets over recent weeks. We haven't perhaps talked too much about the Italian bond market, but we need to. Status quo in Italy, the president stays the president, the prime minister stays the prime minister. Neither of them wanted to keep those jobs, but that's what's happened. And as a result, we saw the spread against the Bund coming down a little bit for the Italian BTPs, and that yield coming down a little bit. Those key risk indicators for the Eurozone in terms of bond market risk coming down a little bit reduced in terms of anxiety there. Vodafone's share price up by 3.4%. This telecom services provider, of course, an activist investor now reportedly in the mix there. What kind of change are they going to be arguing for? Market investors more broadly seem to like that one as the stock rises. And Saipem, this is a company that operates in the oil and gas drilling universe. And just because you're attached to that sector doesn't mean that you get the best of the price gains in oil this week. This company complaining about cost increases that they are having to endure. That is one of the reasons behind the profit warning that we saw from Saipem. Kaylee?
Cost pressures coming from all sides for so many of these companies, a big theme in this earnings season. And speaking of earnings season, we do have a number of reports ahead this week, including from European banks like Santander and UBS. We'll also have tech earnings continuing. Alphabet, Meta, and Amazon, all large mega cap companies, will be reporting over the course of the week. On Wednesday, OPEC Plus meets to discuss its oil production strategy. And then on Thursday, the Bank of England and ECB will announce their rate decisions. How much pressure are they feeling as we see tightening bets ramped up, especially for the Federal Reserve? And speaking of, on Friday, we will get the U.S. jobs report for January. The focus is going to be on what extent the health of the labor market may influence the Fed's path of tightening in the coming months, Matt.
All right, now, speaking of, the Fed could opt to raise its benchmark rate by 50 basis points if a more aggressive approach to taming inflation is needed. That's what Atlanta Fed President Raphael Bostic told the FT over the weekend. Let's get more with Bloomberg's Danny Berger. So, Danny, keeping his optionality open.
Yeah, and just when you think that the market can't get any more hawkish, can't price any more in, it somehow does, of course, this being the latest fuel for the fire. Now, at the moment, the market does expect 5 rate hikes this year. Certainly a 50 basis point could be in the cards as well, with March expectations around 30 basis points. Of course, they only hike in increments of 25, so that does suggest some bets for 50. And now we've seen the Wall Street strategists try to catch up to this hawkishness as well. On Friday, Goldman Sachs says that they see 5. We heard from Bank of America saying that they see 7. The way that this is played out in markets, though, is this constant drumbeat of yield curve flattening. All the action is happening on the front end of the curve, with 2-year yields their highest since Feb 2020. That means for the 5s, 30s yield curve, we are now just a mere 10 basis points away from being at the flattest level from the big illiquidity event of March 2020 at the start of the pandemic. We are getting really close to those levels where psychologically the market starts to ask, are we heading towards a policy mistake? Is the curve going to invert? Does this mean a recession? But it also means if you were positioned for a curve steepening, all of these Fed bets mean you've gotten hurt pretty badly over the past few days, Anna.
Yeah, absolutely. And there were reportedly some hedge funds who were positioned for that steepening and got caught on the wrong side of this, making it maybe worse. It's not just the Fed that we're talking about this week, though, Danny, although we'll continue to do so. The Bank of England and the ECB, they have rate decisions this week, building expectations for a rate hike at the Bank of England. The ECB, not so much.
Yeah, it really could not be two different stories for the ECB and BOE. BOE expectations are that they'll hike again, the first back-to-back rate hike since 2004. And the market here, perhaps much like the Fed, is pricing in just a whole load of hawkishness. At the moment, the market thinks that by September, the BOE rates will be at 1%. Goldman thinks it'll happen even sooner. They think we'll get there in May. This is significant because the BOE has suggested that they'll flip to active QT once we get to 1% in terms of the rate level. Now, that's the story for the BOE, but for the ECB, there is no sign that they'll be hiking, that they'll be switching to QT. They've signaled that they're going to continue those purchases. Christine Lagarde earlier this month said we have every reason not to act as quickly and abruptly as the Fed will. So while the BOE, the question is, has the market gone too far in pricing hawkishness? For the ECB, it's how difficult will it be for them to continue to justify this accommodative stance given the inflationary concerns?
Yeah, it'll be really interesting to hear the language out of Lagarde and co. later on this week. Thank you so much to Bloomberg's Danny Berger. Now turning to Washington, U.S. senators are close to agreeing on a Russian sanctions bill. According to Foreign Relations Committee Chair Bob Menendez, the measure could include penalties even if Vladimir Putin does not send troops into Ukraine. Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. So Anne-Marie, he talked about these upfront sanctions. My question is, would the administration be on board with this?
It does sound like the administration would be on board, given the fact that you have Senator Bob Menendez, a high-ranking, the chairman, Democrat, and he appeared alongside, which I think speaks volume in itself about the bipartisanship when it comes to deterring Russia. He appeared alongside the top-ranking Republican, Jim Risch, in this interview with CNN over the weekend where they outlined this up-and-coming legislation. Senator Menendez says they are on the 1-yard line. So potentially as soon as this week, we'll certainly see the language of it, maybe even a vote. Senator Menendez said up front there could be some sanctions about issues Russia has already dealt with in terms of Ukraine. Cyber attacks, false flag operations, and also just Russians trying to undermine the Ukrainian government. The one sticking point, though, and something to really watch out for, is what they will agree upon when it comes to Nord Stream 2. Senator Risch said this is something that still needs the T's and the I's to be dotted, but they do think that they are getting very, very close to a package.
Okay, so the U.S. thinks it's getting close to a package in terms of sanctions, Anne-Marie. What's the broader global narrative like? We know that the UN Security Council is set to debate this crisis today.
The UN Security Council is set to debate, and there's going to be a lot of broader diplomatic pushes this week alone. So today we're starting out at the UN, which the U.S. ambassador to the United Nations had said over the weekend that she expects Russia to want to try to ignore or get rid of and try to block this meeting, but she says that they cannot do so. And then at this moment, it's important for Russia to really explain themselves on the global stage and for the international community. She says this is their opportunity to do so. But this isn't the only path to diplomacy we're going to see this week. We do expect Secretary of State Antony Blinken to meet with his counterpart, or at least have a call with his counterpart, Sergei Lavrov. And then, of course, Prime Minister Boris Johnson is going to be having a phone call with President Vladimir Putin this week. So there's going to be another week of just high-level diplomacy between Moscow, Washington, and other Western allies.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horder, and they're reporting on the situation with Russia and the Ukraine out of Washington. Now, Italy has finally decided on its leadership after a chaotic week. Sergio Mattarella will stay on as head of state while Mario Draghi remains prime minister. It's a surprising outcome, but it should maintain political stability, pushing away the prospect of a new election. Let's get more with Bloomberg's Francine Lacroix, still on the ground in Rome. Francine?
Yeah, single-handedly helping GDP by drinking a lot of espressos and cappuccinos. Matt, it is surprising because we actually stay in the status quo that we had a week ago. Markets like it because they look at stability. But I would point to the dysfunctionality of the process. So if you end up with a president that did not want to be president, that had said many times he absolutely wanted to retire, and that's the only name that came through, you wonder what happens next. So there's a couple of things that we need to watch out for. For the moment, the markets are pointing stability, but does it weaken Mario Draghi? Probably yes, but maybe just in the short term. And longer term, are politicians and parties actually going to be not going along with Mario Draghi's wish list for reforms because they want to make sure that the electorate votes for them? So are we going to see much more differences within government as we head into elections in 2023? So for the moment, stability, but it is Italian politics and things can change quite quickly.
Things can change quickly. Good morning to you, Francine. So we've seen that stability, as you say, in the markets. That is the line the markets are going with right now, the spread between BTPs and the Bund coming down, yields coming down for Italy. So that's the narrative the market has jumped on. What concerns do we have about Mario Draghi's ability to push through his agenda, his reforms into the future?
Well, first of all, Anna, because he had said repeatedly that he would have been quite happy to become president of the Republic, it probably weakens his standing. He is, of course, very well regarded and brought a lot of stability to Italy over the last 11 months. But you kind of wonder whether he, will govern in a more collegial way. In the past, and we knew this from his time at the ECB, he was very much listening to everyone, but then doubling down on what he wanted, something that lawmakers last week held against him. So you wonder whether his style of governing will change. And again, you wonder whether the political parties, because he wasn't voted as president, will test him a lot more. At stake is, of course, the 200 billion euro recovery fund, and the success of Italy will ultimately also decide the success of Europe in disbursements of this recovery fund.
All right, thank you so much to Bloomberg's Francine Lockwood reporting from Rome over the better part of the last week. And of course, while we were watching Italian politics over the weekend, a lot of us were also watching sports, Matt, and a lot of confusion around the future of Tom Brady. After 22 seasons, 7 Super Bowl wins, reportedly he will be retiring, though that's not confirmed, still a little bit fuzzy. And then as far as the Super Bowl goes, really exciting day of games yesterday. Again, the Bengals overcoming an 18-point deficit to defeat the Chiefs and Patrick Mahomes in overtime with another field goal kick from the rookie Evan McPherson. Really exciting game. The 49ers also losing to the Rams. So we're looking at a Rams-Bengals Super Bowl 56 in a couple weeks. I got to say, Matt, I'm pretty excited. I was rooting for the underdog when it came to the Bengals.
Yeah, absolutely, as was I, obviously, straight out of Ohio. I thought it was interesting to watch the Tom Brady saga unfold because clearly it looks like he's retiring and everyone else just announced it before he has been able to, which they're trying to kind of walk back until the man himself has his say. But then the Bengals win kind of overshadowed that. I mean, they haven't been in the Super Bowl since before Taylor Swift was born. So, and you, obviously, and maybe many of our viewers. I mean, the last time they were in was at the beginning of 1989. And they lost that to the 49ers. So great to see the Bengals back. Great to see this new face in Joe Burrow, even if he has some interesting fashion choices. Do you see his diamond pendant?
It was very 80s with the turtleneck and the puffer jacket. But of course, Anna, it wasn't just football we were watching as well. It was tennis as well.
It was. I like the way that Matt measures time in, lifespans of Taylor Swift. There were other sports available, of course, over the weekend. I won't pretend to have much to weigh in on the American football side. But Rafa Nadal, of course, has won a record 21st Grand Slam singles title. Nadal beat Daniil Medvedev in 5 sets to win the Australian Open. Does this or does this not make him greatest of all time? Does it matter who got 21 and who got 20 Grand Slam titles? Is that how we should be measuring these guys? I mean, the top three at the top of this sport, just incredible achievements regardless. But yeah, stunning win in Australia for Nadal. Kaylee?
Yep, so watching the GOAT in tennis and also arguably the GOAT in football, as much as I hate to say it. All right, let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One moving to the upside is Spotify. Of course, it saw almost $4 billion wiped off its market cap last week because of the saga over Joe Rogan and misinformation as it relates to COVID-19 vaccines on his podcast. Spotify now saying they're going to put new rules into place, and Joe Rogan apologizing, say he'll have guests from both sides of the issue and do better research. So that is lifting sentiment a little bit this morning, up 1.2% before the bell. Another stock moving to the upside is Beyond Meat. It was raised from underweight to overweight at Barclays. The analyst putting an $80 price target on the stock. That's about 41% upside from Friday's close. This morning is trading up about 4%. One stock moving to the downside, though, is Citrix Systems. The software maker reportedly is going to be bought by Elliott and Vista Partners for $104 a share. That's actually a little lower than the stock closed on Friday, and it is moving lower this morning, down about 3.5% before the bell, Anna.
A lot of movers in focus then. Coming up on this program, Charlotte Ryland, CCLA co-head investments. We'll talk to her about Fed expectations, other central banks, of course, meeting this week. What are her thoughts there? And we'll address the tensions in Ukraine and the election in Italy. Elizabeth Braw, American Enterprise Institute resident fellow, joins us later in the program. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg. Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting. Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards joining us out of London. Now, I like to, especially at the end of the month, pimp the SEAG function. S-E-A-G go on your Bloomberg terminal. Shows you the seasonality and the distribution of any publicly traded asset. I'm using it today to look at gold because February is typically a down month for gold, as is March. Now, they're not the worst months of the year, but they are interesting because they're the beginning of the year for in the Chinese calendar. It's the year of the tiger, and as such, I want to welcome Eddie Vanderwalt from Bloomberg's MLive team to talk about what this means for gold, although obviously, Eddie, SEAG works very well for oil right about now as well.
I love that function. I can talk about gold seasonality all day long because people don't think about gold as a seasonal asset. People think about coffee or wheat or, you know, things that grow according to the seasons. But gold seasonality comes from its demand side, right? When you see, you highlight Chinese consumption. China is the biggest buyer of gold. And when the Lunar New Year rolls around, there's a lot of gold consumption, which comes immediately after, you know, Western demand over Christmas for trinkets and so on, and there's strong physical gold demand. But you typically see February, you know, that demand just drain away. Now, one of the reasons why that seasonality chart's hard to pin down is because, you know, the Lunar New Year shifts dates from early February, late January, and so on. But really, this is a very precarious moment for gold, and we could just see some drawdowns here.
Okay, yeah, and on another occasion, we could talk to you about the seasonality of oil and what we're seeing in oil prices. Certainly some movement to the upside this morning. Eddie, thank you very much for joining us. Eddie van der Veld of Bloomberg Markets Live. And for more market analysis, check out the MLIV Go function on your terminal. There you will find the thoughts of the Markets Live team. This is Bloomberg.
Did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Now for the first word news, and North Korea continued its largest series of missile tests since Kim Jong-un took power. It appears to have fired one of its biggest ballistic missiles in almost 5 years. A Japanese spokesman says it flew eastward and landed in waters outside Japan's economic zone. In China, manufacturing expanded at a slower pace this month due to a seasonal slowdown, COVID outbreaks, and a decline in the housing market. Chinese factories often see a production lull in January and February when workers head home for the Lunar New Year. And in the UK, Prime Minister Boris Johnson will shift gears from the Partygate scandal that's led to calls for his resignation. This week, he'll introduce legislation making it easier to remove EU laws from British statute books, and he'll also hold talks with Russia's Vladimir Putin. And coming up, we'll talk geopolitics, Fed policy, and all things influencing these markets with Charlotte Ryland, CCLA co-head of investments. That's coming up next. This
is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller and Kaylee Lines in New York. Here's what you need to know. Atlanta Fed President Raphael Bostic says the central bank could do a half-point interest rate hike in March if needed to fight inflation. In an interview with the Financial Times, Bostic stuck to his prediction that the most likely scenario is 3 quarter-point increases this year. Goldman Sachs sees central banks being more aggressive in the fight on inflation. The bank's economists now see the Fed raising rates 5 times this year instead of 4, and they expect the Bank of England to boost rates 3 times. That would be the quickest tightening for the BOE in a quarter century. And U.S. senators are close to agreeing on a Russian sanctions bill. According to Foreign Relations Committee Chair Bob Menendez, the measure could include penalties. Even Vladimir Putin does not send troops, even if he doesn't, send troops into Ukraine. The Biden administration will brief lawmakers this week on the standoff. That is a look at what you need to know this morning. Matt, you're across the pre-market for European stocks or for the market as a whole. What are we expecting to see? It seems that the futures picture is a little mixed.
Yeah, the futures picture is a little mixed. We have some indications of, well, now they're down. S&P futures looked like they were going to rise, but now they're falling. We do see very little change here, and I will point out that, you know, as it's the last trading day of the month, we take stock of what it has been like. You've been along for the ride. It's been pretty rough. January is a loss of 7% for the S&P 500, making it the worst month since March of 2020. The 10-year yield is rising just a little bit, 178.56 the level here. So that looks risk on On the other hand, Bitcoin is down 1.5%. That's risk off, except for the fact that we've climbed up to a better level now, 37,206. NYMEX crude is worth watching, and oil and gold in general, I think, are worth watching today. But NYMEX at 87.59 and Brent at 90. So we're looking at 17% gains for the month of January in oil, and that is the best monthly gain, or the best January gain, I should say, in at least 30 years. Kaylee, what do you see in terms of pre-market movers?
Well, I would note that tech stocks are actually outperforming, and even though you have S&P 500 futures lower, NASDAQ 100 futures are still in positive territory, and that's thanks to a number of stocks that are on the move before the bell. One of them being Tesla, which was raised to an outperform at Credit Suisse. The analyst there is saying he's hard-pressed to find a stock that checks as many boxes as Tesla does. He also put a $1,025 price target on the stock. That would be about 21% upside from Friday's close. It's up about 2% this morning, trading at $864. You also had Netflix upgraded over at Citi, maybe seeing a time to come in after the hard losses that stock has taken since its earnings 2 Fridays ago. It's up 2% before the bell. Nvidia also higher, another tech player higher by 2%. And of course, Apple was up 7% on Friday after its blowout earnings report. Anna, it is continuing those gains in marginal fashion this morning, up about 0.3% before the bell.
And Kaylee, your point about tech outperforming this morning certainly applies here in Europe. One of the best sectors in terms of performance across the European equity space is the technology sector, up by 2.4% this morning. A lot of focus on Italian politics as well, which is why I put the Italian 10-year yield in here. Our colleague Francine Lacroix saying, yes, the markets are focusing on the very short term, the stability, the status quo for Italian politics, and that is what brought those yields down earlier on in the session. But just as we're watching them, actually heading a little bit higher in terms of the most recent market moves in today's session. Vodafone is in focus for us. This is the telecom systems business, of course, telecom network business. That stock up by 2.7%. An activist investor very much in the mix here, just as we've seen activists making their presence felt at Ericsson, at AT&T, at Telecom Italia, a host of telecoms names coming under that kind of pressure. What can they do at Vodafone? The stock goes higher on that. And Saipem down by 29% over in Italy. This is a business that supplies the oil and gas industry, also wind, and they're talking about higher costs coming through for their business. Kaylee?
Higher costs and inflation seems to be the theme of this earnings season and really the past year or so. And of course, that is something that the Fed is trying to fight. Let's discuss with Charlotte Ryan, co-head of investments at CCLA Investment Management, who's joining us now. Charlotte, you have Raphael Bostic of the Atlanta Fed talking about the possibility of a 50 basis point hike. You have Goldman now seeing 5 for the year, Bank of America seeing 7. Where are you in terms of how much and how many times do you think the Fed will hike this year?
Yeah, we seem to be in a race for who can come up with the biggest forecast for number of rate hikes, don't we? But no, I mean, I think, you know, we're clearly seeing the Fed talking quite hawkishly at the moment. They clearly want to show that they are on the front foot, despite a lot of the doubters on that point. I mean, for us, I think we still think, you know, we are going to get maybe 3-4 rate hikes this year. It's slightly hard to tell, but you know, it will all, of course, depend on what happens into the second half and whether we do actually begin to see inflation beginning to correct. I mean, that is still, if you look at most of the economists, most of them are still expecting that inflation will sort of pull back from these sort of 6-7% rates that we're seeing at the moment back towards maybe 2 or 3 as some of those you know, supply chain bottlenecks begin to ease, as things like auto inventories pick up, and therefore you know, second-hand car prices begin to fall back. You know, clearly the oil price is extremely elevated at the moment, and the Ukraine situation is clearly not helping with that. But if that were again to you know, calm down, that again could sort of point towards inflation pulling back, and therefore not needing quite such an aggressive response from the Fed. But I think at the moment it's, you know, it is very hard to call precisely what's going to happen, and so therefore I think, you know, a degree of caution is warranted.
It is difficult to call, of course. To what extent have we right-sized the technology sector, Charlotte, do you think, given what is coming from the Federal Reserve and other central banks, given the selling we've already seen? I've got a chart that talks about US non-profitable tech stocks, the ratio of those to the broader NASDAQ, actually back to pre-pandemic levels. I wonder if that is the right size for non-profitable tech to be at, to sort of bounce off, or do we have further selling to go?
Yeah, I mean, it's been a pretty savage cutback in some of those names. I mean, the ARC ETF being sort of the obvious one that people look to, and people talking about, oh, there's some bargains emerging there. For us, we focus much more on the tech companies that are much more established and much more cash flow generative, and those have held up reasonably better. But and definitely beginning to come into territory now where they're beginning to look a lot more attractive, having been sort of pretty quite elevated towards the back end of last year.
So you like the big profit-earning tech stocks. Where else do you put your money?
We still like, for the longer term, the healthcare sector. I mean, whether that be, some of the more innovative areas, the Illuminas of this world in sort of genetics, or, some of the healthcare equipment names, again, we think look attractive into the longer term. Again, they've been beneficiaries of the pandemic, clearly, and you have to make sure that, not too much of that is within that earnings base. But, we still think those look reasonably attractive. And then, some of the consumer names as well. So, I think McDonald's, for example, had reasonably good numbers last week. The consumers in reasonably good shape. So, some of those branded consumer names, to us look really reasonably attractive as well. So whether that be some of the sports-aware names or some of the things like, Starbucks, for example, which has pulled back significantly.
But you are taking, in general, the view that in this downturn, you want to buy the dips rather than sell the rallies?
Yeah, I mean, I think for us, we don't expect that equity returns are going to be as good as they were last year. I think clearly with a tightening monetary policy, that's going to make things more difficult for equities. But, it is still a year of decent economic growth that we've got ahead of us. The consumer is still in reasonably good shape in terms of savings. The corporate balance sheets are, again, reasonably good shape as well. So, if you can find, some of those decent companies, they should continue to do reasonably well. But it's definitely going to have to be a year of being somewhat more selective.
Well, speaking of tighter policy, that is also going to be uneven depending where in the world you are. Europe, for example, looks like it will be much, much slower. Does that mean you favor European equities over U.S. here?
I make too much money to have fake ones, so.
I think, certainly the ECB looks like they will be moving a little away from quantitative easing, but not actually pushing up interest rates. That's certainly the consensus. But I think, it comes back down to, the actual individual companies and the growth drivers behind them. And so for us, we tend to find more opportunities within the US just in terms of those technology and healthcare sectors than we do in Europe. But there are some names within Europe that we think are attractive. So, some of the luxury names, for example, have produced, really quite blowout results and continue to be sort of very well placed in terms of their brands and their market positioning.
Okay, yeah, we certainly saw that one of the themes last week. Charlotte Ryland, thank you very much, of CCLA Investment Management. Just as we're talking there, Stocks Europe 600, that index pairing its gains to trade still higher, but only by 0.5% now this morning. When we come back, we'll talk about geopolitics. Elizabeth Braw, American Enterprise Institute resident fellow, joins us. What do we make of the fact that the Ukrainians sort of downplaying the risks of invasion, whilst the US and the UK once again this morning are playing those risks? We'll talk about that next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze market.
Connection lost.
You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. Now, as tensions continue to mount over Ukraine, the US and Europe are zeroing in on a new package of sanctions. Meanwhile, the UN Security Council is set to debate the crisis today. Elizabeth Braw, resident fellow at the American Enterprise Institute, joins us now with her perspective. Elizabeth, really good to speak to you. What do you make of the divergent assessments of the risks that we seem to get if we listen to Ukrainian officials who don't want to state too frequently and too severely, I suppose, the risks of invasion, and then you listen to the US and the UK specifically, who keep returning to the theme of risks. What do you make of that divergence?
Well, it seems really odd, doesn't it, that the country that's affected or that's under risk of war downplays that risk when its friends and allies are trying to help by drumming up support for that country. But I think the reason, in fact, I'm convinced the reason is that the Ukrainian economy is already suffering because of this risk of war. I mean, which investors would want to invest in a country where a war may break out any day? We have already seen in various financial indicators that as investors in money markets are getting concerned, and now also insurance companies. So, for example, out of 60 insurance companies that insure political risk traditionally in Ukraine, only 3 now provide that insurance, and at a very high premium, and unsurprisingly because of the risk. So that risk is already draining the Ukrainian economy, and clearly that's something that's not in Ukraine's interest.
Elizabeth, where do we look for sanctions that really would be effective in what they set out to do, which would be to penalise the Russian government if we did see an invasion of Ukraine? Do we actually look to London? I see plenty of people writing over the weekend about Londongrad, about the ability of rich Russians to put billions of dollars into UK property and other assets.
That is the challenge. So traditionally, as I think your viewers know, sanctions have been imposed on leading officials and also companies in the country that you're trying to punish or trying to warn. But of course, in the case of Russia, many of the people that you would like to punish have their assets in London, whether in properties or bank accounts or other assets. So it's a little bit difficult to target them. But that's what the international community is trying to do. And that's an interesting development because the UK traditionally has been very averse to such punishment, simply because it's good for London, good for the UK to have all that money in London specifically. But I think one other avenue that would be quite useful to try is to look at these people's visas, these Russian, not just officials and oligarchs, but their families. They have wives, other partners and children living in the UK. I think it would be quite a powerful weapon if you want to say, well, we might suspend those visas.
What about if they stopped buying Russian gas and oil? You know, obviously that would be difficult for European countries and economies, but would that stop Russia, maybe change the direction that they're heading?
There is, I think, a chance that might happen, and we should remember that Russia doesn't really have a pipeline network, for example, leading to China. So its traditional exports have been to Europe, and so that would be quite powerful. The question is whether we could do it, whether we as Europe, as the West could do it, considering how much we rely on Russian energy. So I think that would be quite powerful to sort of volunteer, quite risky to volunteer that step. But again,
Elizabeth, can you imagine a situation? Can you imagine a situation in which Russia invades the Ukraine and Germany continues to buy Russian gas?
Well, we live in the realm of unlikely scenarios becoming reality. I think Germany might not be averse to doing that, but if you look at the international pressure, the international outrage that would face Germany in such a situation, I think it's impossible that the Germans would keep buying Russian energy under such a circumstance. But we should remember that the Germans have also said that they will suspend Nord Stream 2 in case of an invasion. So they are, I think, changing their thinking a bit. But there may be problems heating German homes as a result if they were to suspend all energy imports from Russia.
Elizabeth, can we talk about Vladimir Putin's risk calculus here? Because what this is leading to is a reorientation of the conversation around NATO, a re-energizing, maybe you could say, of that alliance. Also, the U.S. potentially having a larger footprint in Eastern Europe. How big could this blow back on Vladimir Putin?
He is somebody who spots vulnerabilities in the West. So where we have disagreements, or where we are not really risk averse, where we don't really want to confront or want a confrontation with Russia. And it's interesting, actually, that despite there being so many learned men and women in the corridors of power in the West, it's Irish fishermen who have managed to get Russia to back down, and they did so after Russia announced it was going to conduct an exercise in Ireland's exclusive economic zone. And Ireland's fishermen said, well, hang on, that's where we are, that's where we fish, and we are going to be there in such large numbers that it will be impossible for the Russian exercise to take place. And lo and behold, Russia backed down. It's a remarkable achievement for these Irish fishermen, not traditionally thought of strategists of geopolitics. And I think there is something that Western governments can learn from them when they assess Putin's risk calculus, because the Irish fishermen tried something completely different. They didn't just issue warnings of, oh, you will be sanctioned. Of course, fishermen can't sanction the Russian government, but that's the tired instrument that the West uses. You will be sanctioned. And the Russian government has figured that out and incorporated it into its risk calculus.
Okay, yeah, really interesting. Different line of policy that isn't actually policy but has an interesting effect. Elizabeth, thanks so much for joining us. Elizabeth Braw, American Enterprise Institute resident fellow, with her reflections on Ukraine tensions. Coming up later today, U.S. Ambassador to NATO, Julianne Smith. That's at 11 a.m. in New York, 4 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Tom Keene, co-anchor of Bloomberg Surveillance, is up next and joins us now with a preview. Tom, what are you watching?
What I'm watching is speed of change here. I mean, it's an interesting week. We go into the jobs report this Friday. We'll have a much better handle on the American economy, ISM tomorrow. But what's really interesting to me, Matt, is the speed of change that we're seeing. I know the focus on oil. I'm focused on the vanilla spread, the difference in yield between the 10-year and the 2-year. This is logarithmic, which means slope matters. You rarely see this matter. It's usually not a way that you look at the spread market, but it shows the first derivative rate of change of the sudden flattening that we're going to have. And you can see back a number of months, down we go with a flatter curve and then aggressively in the last number of days.
Yeah, Tom, good morning. It's interesting to think about what is driving that curve move and how future inflation expectations play in here. I'm thinking about the oil price. You referenced that, and we sit here with oil prices going ever higher, 1.4% higher on Brent at 91.32. And we've seen 6 weekly gains for oil prices as we head towards another OPEC Plus meeting. Questions whether they really have the supply that they keep promising.
Well, that may be the macro. I just looked at the chart. The extrapolation of oil off the bottom, I believe in November, is we get to $100 oil by Washington's birthday. Anna, Washington was a president of the United States of America back when
I've heard of him.
The colonies separated from the mother country, as it's called. And you got oil out to $100 the end of February. Maybe it's February 2, and that gets your attention. I would suggest worth watching is what considered people are saying about economic growth. JP Morgan reaffirms Friday that they look for 1.5% present quarter growth. That's slow.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much for joining us. And now we're taking a look at what else we're watching. I will be watching to see if we get confirmation of Tom Brady's retirement. He really kind of lost control of the narrative here, guys, after it was reported via sources over the weekend that he was retiring. But Matt, you know I am not the biggest Brady fan. Even I can't deny he's the GOAT. I was looking up some of his stats. 84,000 passing yards, 624 career touchdown passes, 15 Pro Bowl nods, 5 Super Bowl MVPs in addition to the 2 other Super Bowls he won. I mean, this guy honestly is the GOAT, and it will change the game when he is no longer in it, Matt.
True. Never forget Deflategate, though.
True.
I can't imagine how many times the Patriots were caught cheating and they were still allowed to play in and win Super Bowls over and over and over again. I'm keeping my eye on the supply chain. You know, we were just talking with Charlotte Ryland, CCLA, and she pointed out she thinks inflation is coming back 2 to 3% because she thinks these supply chain issues are going to get under control. Tomorrow, we have a lot of data. Tom was just mentioning ISM. You got their manufacturing survey out. You've got the U.S. manufacturing PMI out. So you've got a lot of data coming in still to help us measure what the supply chain looks like right now, how it's affecting the real economy, and how it's shaping up. So maybe things are getting back in order.
Yeah, absolutely poring over all of the details of those CEO, CFO conversations that we have around supply chains, around pricing power, around the ability of businesses to navigate these incredible challenges that just seem to linger in these markets. I'm watching the Spotify story. This is a really interesting one, facing boycotts from some artists who have previously put their music on Spotify over the podcaster Joe Rogan. Joe Rogan has apologized, or, well, he said he's sorry if he made you angry, using words that are a bit ruder than that. But he's also said he's going to try harder to bring other views into his podcast and do more research. But this is all really interesting, I think, in the question of regulation around publications and broadcast, because we've seen this in print and in social media for a long time, haven't we, about what exactly it is to host and to publish. And now we see it coming to the world of podcasts as well. We'll see how this one plays out. More Bloomberg surveillance is ahead. We will hear from BlackRock, also from Alpine Woods, amongst other conversations. This is Bloomberg.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
We also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
What's important here is how the investor risk appetite has been.
Earnings will start to matter more because that's going to be the key to driving markets higher.
There is a risk to growth, especially in the second half of the year.
Financial conditions haven't really tightened enough, clearly.
I think it's a bumpy ride.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Closing out an ugly month from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramovitz. I'm Jonathan Ferro. Your equity market this morning on the session, negative a tenth on the S&P. TK, the rate hike guessing game continues.
Well, it continues as well. And, you know, it's sort of a jumble here on a Monday. To me, John, the key thing is you and Jerome Powell get a lot of economic data by 8:35 Friday. We're going to have a much better handle on where are we now, given a data-dependent Fed.
Let's push ahead to payrolls this Friday, Tom, and look at the range of estimates right now. 250 is the high, negative 400K is the low. And if we look at Bank of America coming out with that 7 rate hike call, that got all the attention. A bit further down in the same note, Tom, they're looking for a contraction on payrolls this Friday of 150K. So they're looking for negative 150 and still looking for 7 hikes this year.
Economic current rolls over into it. We got the Apple glow this week. We've got a lot of earnings coming up, folks. Just before payrolls, we get Amazon, which maybe is a bellwether. I'll let you decide. But, John, to me, it's just a jumble here, and we need to see data. We do that this week.
In the near term, Lisa, the hope is that we look through some weakness, some softness, and through the back end of this year, things get better.
Well, that's the hope. What's interesting is we've got to look at the data, and yet if Bank of America itself is expecting an actual contraction in payrolls, but still expecting the Fed to hike rates 7 times, which data actually matters? Which will actually push the Fed one way or another to either be more or less aggressive? It seems like it really is focused on inflation and short-term inflation, not longer-term inflation expectations, which keep dropping.
Some really interesting notes coming out over the weekend, Lisa, including Goldman Sachs, who basically laid out a runway just to get us all understanding what negative real rates mean and what a move towards positive territory would mean for this equity market.
Right. David Costin coming out and saying that if real yields on 10-year treasuries came up to 0, that would be a 60 basis point move, that basically the S&P would tumble to 4,000 or about 10% from where it closed on Friday. This has been the trajectory of a lot of analysts' notes, trying to game out a scenario with less Fed support.
That's the market and the economy covered. Where are we doing sports in today's show, Tom?
Oh, I think we can do it really across all. I mean,
later,
the gloom there from Lisa was like the gloom of the Kansas City Chiefs. I mean, you know,
those overtime rules, Tom, what are they about?
They're about TV. They're about getting to 60 minutes. If we don't have 60 minutes on, we're going to turn into a pumpkin. And in their defense, they've never had games this exciting back to back to back. I take your point, John. I think they ought to play the whole, particularly the playoffs. They should play an entire quarter, you know, something like that. I'm not an expert on this, but I do agree that the rules and the flip of the coin seems so determinative.
Lisa's got something to say on Tom Brady a little bit later. We can save that. Some important comments coming up through the show. Futures softer on the S&P. We're negative 7. We're down a little more than a tenth of 1%. It has been ugly for the NASDAQ through most of this month. On the NASDAQ this morning, we're positive by 0.4%. Yields are higher at the front end, higher at the long end too, up by a basis point or two. On 10s, Lisa, 178.56.
Honestly, I wonder which aspects of this week. We've got an incredible amount of data, as well as the ECB and the Bank of England later this week, and Amazon reporting earnings. Which of them will actually make a difference in the narrative? At 11:30 a.m., San Francisco Fed President Mary Daly is going to be interviewed during a Reuters live event. The reason why I am particularly interested is to see whether she emulates what Raphael Bostic said, the Atlanta Fed president, in a Financial Times interview that was published over the weekend, where he said, if the data say that things have evolved in a way that a 50 basis point move is required or appropriate, then I'm going to lean into that. If moving in successive meetings makes more sense, I'll be comfortable with that. And honestly, how much is this becoming something that's a possibility after so many analysts came on and said, who are we kidding? We're not going to do 50 basis point move. Interesting to see at least some support for that. Today, the U.S. Census Bureau is releasing a report examining older households' income streams. The reason why I find this particularly interesting is because you can see the participation rate for people aged 55 and older in the United States has gone down dramatically and stayed there since the onset of the pandemic. There has been a wave of retirements. What data can we get in terms of what the pressure points will be that will push these people back into the labor market, giving us more intel in how fully employed the United States really is? And then at 2 p.m., Qatar's Mir will visit President Biden to discuss possibly supplying Europe with liquefied natural gas in the case that there are sanctions imposed on Russia or the Russia-Ukrainian conflict heats up. This, to me, is compelling. This is what this is what President Biden has said that he's been trying to do, which is to fortify other streams of gas for Europe. How far have they gotten in those discussions, John?
Brent crude as well today. Never mind nat gas, crude today.
Insane.
91.40 on Brent. Lisa, thank you. Tom, WTI 87.60.
Yeah, I did a very careful log extrapolation, John. This is just a what if given the trend off November, and you get to $100 oil, Washington's birthday, February 22nd. That's how fast this trend is moving. John, I noticed the Washington Post, and they throw it on the cover, and it's Redfin, and I'm not sure how good the statistics are, but they have monthly rents up 14.1%. I really don't know where that number came from, but I'm sorry, whether it's 8 or 9 or 14%, salaries aren't going up that much. That's a huge statistic.
That's what could keep inflation elevated through much of this year. Let's talk about this equity market with Russ Kostrick, the portfolio manager for the Global Allocation Fund at BlackRock. Russ, your words, our base case is equities end the year higher. What's the base case based on, Russ?
Good morning, John. I think the base case is pretty simple, that we're in an environment where the economy is slowing. That's one of the tricky parts. But nominal GDP, real growth plus inflation, is still likely to be somewhere around 7% this year. And when you look at that and you think about the relationship between NGDP, revenue, earnings, you're probably going to have a stronger year for earnings growth than is currently discounted. And yes, as rates back up a bit, you may get some multiple compression. But to our minds, unless they tighten much more aggressively than we think, you're probably not going to have so much multiple compression that it overtakes the earnings growth. So still a year where stocks are positive, although not nearly as positive as we were last year or the last few years.
Russ, as we saw from Apple, and I guess Amazon's on Thursday as well, how does BlackRock value these tech behemoths profiting tons of money? How do you value that right now?
Well, Tom, this is, I think, part of the bull case, that you've got companies like Apple that are still cash flow machines. And as large as they are, they're still growing their cash flow at an incredible rate. They're unbelievably profitable. This is where some of the dislocations are probably creating opportunities. We know that a lot of the early growth names, the names that are not going to have earnings for a decade, they've been hit. A lot of that is tied to the bubble coming out of speculation. A lot of that is tied to real rates going up. When you have companies like Apple, and you can pick any other name within that large cap tech universe, they've come under pressure, but maybe for the wrong reason, because these are not companies where you're looking at discounting cash flow in 10 years. As we saw last week, they're generating tremendous cash flow in real time.
Russ, given the fact that you are constructive on these companies, you've got such positive things to say, and BlackRock has had a stance of holding a bit more cash, when do you know it's time to deploy it?
Well, the cash is not just about trying to time the market. I think part of the reason for the cash, and honestly, Lisa, we're running with a high cash balance today as well, is less about I'm going to time the market. It's more about cash in an environment in which bonds have become the source of risk. Cash, along with, I'd say, a long dollar position, has become one of your risk mitigants. And if you're running a multi-asset portfolio and you're thinking about risk and managing that risk, and you're not getting the same diversification you used to get from bonds, you're going to run with a bit more cash.
Russ, just quickly before you go, Friday, a lot of people expecting a soft print, maybe even a negative one. How do you think we're going to internalize that when the number drops?
I think we're back in an environment where people are going to get a little bit nervous about strong data, because obviously the big fear is the Fed's going to be more aggressive. That said, there's still some noise in this print. We know that the seasonality numbers around the holidays have been off really since the financial crisis. They've probably been even more off since the pandemic. So I wouldn't base too much on one print.
Russ Kostrick of BlackRock. Hey, Russ, fantastic. As always, sir, thank you very much. Lisa, that could be very, very interesting this Friday. There are a lot of people, if you just go through the estimates on the Bloomberg terminal right now, there's a big grouping of people looking for a negative print on Friday. How we'd respond to that, given how much we've baked in on the front end.
And the fact that the people who are expecting a negative print aren't the people who are the most or the least aggressive with respect to their expectations for the Fed. How much is this really going to be just about wages? How much about income? How much about other data that's high frequency that moves beyond Omicron?
I was going through all these rate hike calls, Tom, from the banks on Wall Street. Morgan Stanley at 4, Standard Chartered at 4. You've got this pack of 5, all around 5 hikes. DB, Goldman, Citi, JP Morgan, Wells, BNP at 6, Bank of America at 7. Not all those calls are equal. So if you take the likes of Standard Chartered at 4, Tom, they think you hike, and then you stop in July. You stop in July because after that they look for the inflation to fade and maybe growth too.
Yeah, I think it's a really important statement, John. And what this comes down to is, I've brought this up a couple times. Why can't they just say, okay, we're at a ridiculously low rate, we're going to go up 50 beeps, and then we're going to sit on it and wait for available evidence? And I must admit, the pro-economists, pro-monetary theorists, PhDs say, Tom, that's not the way it works.
I don't think that President Bostic was teeing up a 50 basis point hike, by the way.
No, I don't know.
Meeting.
You know, I read
what
that
I heard
article.
in that interview, in that article on the Financial Times, was very similar to what we heard from Chairman Powell earlier last week, Lisa.
Yeah.
Basically, we're ready to go. Every meeting's live. We'll do what we need to do in line with the evolving data.
That's exactly my thoughts, that this is not him necessarily supporting a 50 basis point hike. However, the fact that they have not taken it off the table is interesting in and of itself, especially as a lot of strategists say, it's not going to happen. Who are we kidding?
They haven't taken 100 basis points off the table either.
Okay,
for March either.
Okay, so you think that it's absolutely not going to happen?
I think this is the media question du jour.
John,
for now, at least. I'm not saying it's not going to happen. I'm just saying, look, the statement is clear. We want to be nimble. Every meeting's live. It's not like last time around where you wait for a quarterly meting. We can go.
How'd you do in the blizzard, John? Have you ever seen a blizzard like that?
I've seen some snow before, TK.
I was thinking of you, John.
Goodness.
I went out on Saturday. For a little bit of an alpine trek.
To what? The grocery store?
Just along Canal Street. Futures down 2 on the S&P from New York City this morning. Good morning with Tom Keene, Lisa Abramis and Jonathan Ferro, counting you down to Payrolls Friday. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. U.S. senators are close to agreeing on a Russian sanctions bill. According to Foreign Relations Committee Chair Bob Menendez, the measure could include penalties, even if Vladimir Putin does not send troops to Ukraine. The Biden administration will brief lawmakers this week on the standoff. North Korea has added to the largest series of missile tests since Kim Jong-un took power. It appears to have fired one of its biggest ballistic missiles in almost 5 years, according to a Japanese spokesman. The missile flew eastward for 30 minutes before landing in waters outside Japan's economic zone. Atlanta Fed President Raphael Bostic says the central bank could do a half-point interest rate hike in March if needed to fight inflation. In an interview with the Financial Times, Bostic stuck to his prediction that the most likely scenario is 3/4-point increases this year. The Fed typically raises rates in quarter-point increments. In China, the manufacturing sector is losing steam and expanded at a slower pace this month. The biggest reasons: a seasonal slowdown, COVID outbreaks, and a decline in the housing market. Chinese factories often see a production lull in January and February when workers head home for the Lunar New Year holidays. And in pro football, it will be the Cincinnati Bengals versus the Los Angeles Rams in the Super Bowl. The Bengals rallied from an 18-point deficit to beat Kansas City 27-24 in overtime to win the AFC title. In the NFC Championship, the Rams overcame a 10-point deficit to beat San Francisco 20-17. The Super Bowl is set for February the 13th, the Rams' home field. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting.
Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
But clear and transparent about our concerns here at the Pentagon over this rapid buildup over the last few months around the border with Ukraine and in Belarus, not to mention, maritime activity by the Russians in the Mediterranean and the Atlantic. So what we've said, Dana, is that he has a lot of options. Putin has a lot of options available to him if he wants to further invade Ukraine, and he can execute some of those options imminently.
That was John Kirby, the Pentagon press secretary, speaking to Fox over the weekend from New York with Tom Keene and Lisa Browitz. I'm Jonathan Ferro. Your equity market is negative a little more than 0.1% on the S&P. On the NASDAQ, up 0.4% on the month. The S&P down about 7%. You have got to go all the way back to the depths of the pandemic, March 2020, to have a month as bad as the month of January for 2022. In the bond market, yields are just a little bit higher, up 2 basis points to 178.74. And iron crude throughout the whole of this morning. Brent through 91 again today, 87.60 on WTI. Just getting some headlines, Tom, from the Financial Times. The US has drawn up sanctions targeting Vladimir Putin's inner circle and its ties to the West as Washington broadens the list of financial penalties it is ready to impose if Russia invades Ukraine. Tom, that just crossing moments ago.
John, didn't you think just what an odd, clumsy weekend in international relations? I thought Angela Stent, writing in Foreign Affairs on the Putin doctrine, which we mentioned last week, was really interesting. But away from the thinking about it at 60,000 feet was almost the panic about it nation to nation.
A tough time for the administration, Tom, trying to really push forward the idea that there is a big risk here. At the same time, the Ukrainians want to play it down.
Yeah.
At the same time, they're asking for more aid as well because they're worried about an invasion. Tom, it's difficult at the moment to tie all the pieces together.
Absolutely. Let's try that with Anne-Marie Horton joining us, our Bloomberg Washington correspondent today. My head's spinning, Anne-Marie. How bad is President Biden's head spinning on Ukraine?
Well, it's complicated for a number of issues you just mapped out. One is making sure they can get all the Europeans on board to harsh sanctions package, which over the weekend we got a little bit more information on when Senator Menendez and Senator Risch, a Democrat and Republican, went on CNN and outlined what Congress is drawing up in terms of those sanctions.
It's difficult
and then,
at the
of
moment
course, there's this potential worry that if there was to be an invasion, what does that mean for Europe when it comes to gas and oil? And much of this is about gas. And he'll have a chance to discuss that today when he meets with the Emir of Qatar.
Okay, he's going to meet the Emir of Qatar, and that's going to be about hydrocarbons. Is there an actual plan to assist Europe with oil, with natural gas, and other fuels?
Well, that's what they're working on, and Qatar being a top supplier of natural gas, the U.S. recently overtook them, but that's likely potentially to flip once again. They would be potentially one of these sources. The issue a lot of these natural gas suppliers have, and it's not just Qatar, I imagine they're in contact with a number of other suppliers. There's Algeria, there's Egypt, there's Libya, there are other places they can look to. But one of the issues is most of these contracts are already being fulfilled, much of them by Asia. But we did see in 2011 during Fukushima, some energy that was supposed to go to Europe was diverted to help Japan. Potentially, you can see a similar scenario happening. But we should note, if this was to happen, one, it would only be if it had to happen, right? This is just an in-case plan. But also, it would likely be a Band-Aid. They can only do this for a few weeks, potentially months. This cannot be a long-term plan to keep Europe warm.
Anne-Marie, how much cohesion is there in Washington, D.C., given the fact that these sanctions are being drawn up by a cadre of different senators led by Bob Menendez of New Jersey, and given the fact that the White House really has not come out with a position on whether to impose these in the near term?
So there's two things on this. One, I was struck by just the fact that Senator Menendez, the chairman of the Senate Foreign Relations Committee, and the top-ranking Republican, Senator Risch, not just the fact that they had this what they said in the interview, but that they had the interview together. That showed a tremendous amount of cohesion between Democrats and Republicans. The one sticking point that I got out from that Sunday show interview on CNN was that there's still a little bit of deliberation and debate on what do they do regarding Nord Stream 2. And Senator Risch said that's going to be the final T to cross and the I to dot. But when it comes to the sanctions, while we haven't seen the administration forthright give their blessing to this package, we have seen them talk tough about sanctions and said they will be harsh. They'll talk about financial penalties, export controls. Today, the FT is talking about the inner circle, which Liz Truss, the foreign secretary of the UK, talked about this weekend. So it's obvious they want to develop an incredibly harsh sanctions package against Russia.
Yeah, that said, though, Anne-Marie, there's a concern that once you let this out of the bag, there's not much else. What other deterrent do you end up having? How much is that an argument that's being had right now in Washington?
Well, that's part of the discussion that the Republicans and Democrats are having for this sanctions package. And it looks like it's almost a two-tier sanctions package. So first, there will be immediate sanctions on issues regarding that have already happened, that Russia has incurred already on Ukraine in terms of cyber warfare, false flag operations, and also already just undermining the Ukrainian government, either from within or just the fact that they're amassing 100,000 troops and counting, according to the Pentagon, and not backing down. Then the second tier will be an outline of what would come, right, if the Kremlin and Moscow were to invade Ukraine. What would be those next sanctions? They would be incredibly harsh in the financial sector, and that is what they would use as a deterrence.
AMH, thank you. Down in DC, we'll catch up with you a little bit later this morning. A headline crossed on the Bloomberg terminal. By now, you are all familiar with Partygate in the UK, the allegations of rule breaking by the Prime Minister's office during the COVID lockdowns. Sue Gray, a senior civil servant, has been carrying out an investigation into that, Tom. We understand the Prime Minister is receiving that report into Partygate today. We also understand from reporting earlier this morning from the team here at Bloomberg that the Prime Minister will make a statement to the UK Parliament a little bit later.
What's the outcome, John? I mean, it's so silly that I can't even concentrate on it. What's the outcome?
So there are two investigations, Tom, and I think we've got to think about that. One is the civil servant, Sue Gray, carrying out her investigation. Yeah. That's investigation number one. The second one is a police probe. So it's going to be interesting today to see how much of that investigation is actually released to the public, given that there is an ongoing police probe as well. Point one. Point two, the whole point of these investigations is to establish whether rules were broken and ultimately whether the Prime Minister lied to Parliament about it. If you get to point two, Tom, and you conclude that the Prime Minister misled Parliament, the Prime Minister would be under a huge amount of pressure to resign.
Is this riveted the nation? I mean,
in a massive way for the UK,
really,
without a doubt, Tom.
Okay.
I would say that in the UK right now they are more focused on this than they are on what may or may not happen in Ukraine. For now, in the short term, at least that's the focus.
I mean, Lisa, weigh in here. I mean,
I'll weigh in.
Like, okay.
Right now, if you look at Predictive, which is a betting market, it says that there's a question, will Boris Johnson remain British Prime Minister through May? And the best offer is 69 cents for yes, cents on the dollar, and no is 31 cents. So just giving you a sense of the range. People actually think he's going to remain through May.
She's following this, Tom, closer than I am, and I knew that already. There is a process to deal with this. Doesn't mean there has to be another election if he did resign. You'd have to select a new leader of the party, and ultimately that leader of the party would then become the Prime Minister. A very interesting system in the UK. Futures down 0.2 on the S&P, on the Nasdaq 100, up a third of 1%. Just going to let that go, TK.
No way.
From New York. Get you back later. This is Bloomberg.
I want to talk Ash Park.
What would you like to achieve next in Saudi Arabia?
As you know, Barrick has invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company. And we have an investment in the Jabal Sayid copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We're almost almost there, almost closing out a brutal month for many of you in this equity market. Futures this morning, negative again, down 0.2 on the S&P on a session. On a month, you know where we are, we're down about 7 percentage points. The worst month, probably, since the pandemic, going all the way back to March 2020. That's the equity market on the NASDAQ, erasing some of the losses, trying to, up a third of 1% on the NASDAQ 100. Do you want to play the rate hike game? Let's do that right now. Deep breath, we'll get through it. 2s, 10s and 30s in the bond market. Look a little something like this. So this is what we've got. Morgan Stanley at 4, Bank of America at 7, a group of 5 at 5. I'm thinking Citi, Deutsche Bank, the likes of Goldman now, Wells Fargo. Who am I missing here, Lisa? Throw in a name.
We should just
name.
have some music.
There's a big pack at 5. What, depressing music with a violin?
Always
Standard
depressing.
Chartered actually have a really interesting call. When you break down these calls, it's not just about who's got 4, who's got 5. If they've got 5, it's the same as the other 5. That 4 at Standard Chartered is front-loaded, which means they go hike, 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 and pause in July and stop. And in their words, the words of Steve Englander and his team, they're looking for a hawkish move relative to market expectations in the near term. They are much more dovish in the long term. And Tom, that's going to be interesting to see how this plays out in this bond market. Hawkish up front, dovish further along the road. If inflation starts to fade, 2s right now at 120.26 TK.
John, with data the way it is, they're going to turn on a dime. I don't think this will be an evolving thing. You're not going to have time to write research reports and gaze at our navel. It's going to turn on a dime if it turns. And I go back to what Bruce Kasman and Michael Ferroli are saying, which is, John, how do you get into a rate sequential game with sub 2% real GDP? I just don't see that.
TK, I hear you. JP Morgan was the 5th one, wasn't it? Thanks for that. Up about 50 basis points on the year so far. TK, you're talking about moving on a dime. This 2-year yield has moved so fast. In a single month, almost 50 basis points.
Right.
Let's finish on this in the commodity market just briefly. WTI and Brent. That is a 17% move year to date in a single month on WTI crude and Brent. Brent 91.22. WTI, Tom, 87.50, up 0.8% on Brent, up another 1% and change.
We recalibrate for February. We do that now. Susan Lund joins us, Vice President of Economics and Private Sector Development at IFC, very much associated with looking at the broader picture of the International Monetary Fund and the World Bank and a greater global view. Of course, we note her duties at McKinsey Group and the wonderful McKinsey Global Institute, one of the great research combines that I take advantage of day in and day out. Susan, if you were writing for McKinsey Global Institute right now, what would you say about the growth trajectory given new inflation of EM countries?
Well, global growth is slowing. There's no question about it. Compared to our forecast in June, we're seeing overall slower growth reflecting the inflation that we've been talking about, really pernicious supply chain disruptions, as well as a resurgence of this pandemic and Omicron that's shutting down parts of the global economy. Even more importantly, though, I think for the work that we do at the World Bank Group, is this is a really uneven global recovery. So while advanced economies are expected to return to levels of output and investment that we saw before the pandemic next year, 70% of emerging markets aren't going to do that. So we've basically erased almost a decade of progress in reducing inequality between low-income countries and advanced economies. And that's something that we really need to address.
The IFC has a heritage back to Bretton Woods. I mean, this is the foundation of, I'm going to suggest FDR, just do something. What do you see as the initiative by the haves to assist the have-nots, given a pandemic, given the finance at the moment, and critically, given the new service sector economy worldwide?
Well, there are a couple of things that we need to do. One is to help revive investment. So the private sector in emerging markets creates 9 out of 10 jobs. So continuing to invest in the business sector is really important. And what we've seen is that investment flows to emerging markets were quite high when interest rates were low. But now that we're looking at rising interest rates, there's a real fear that a lot of that investment money is going to dry up. And that is going to leave some governments in emerging markets unable to repay their debts. So one thing we can do is get on board with talks for debt relief and debt restructuring. We've got many highly indebted governments right now. And then secondly, private investors can just, I heard someone say earlier, take a deep breath and stick with it, because long term, this is where the workforce of the future is. This is where growth of the future will come from. But we've got to try to avoid some of the volatility we saw after the 2013 taper tantrum.
Well, that's exactly where I wanted to go, Susan. How much could potential disruptions in the emerging markets and weakness in those economies bleed over into the developed world and, frankly, hamper all of the economies, in particular the biggest ones?
Well, we're all in this together. If we learned anything over the last 2 years during this pandemic, it's that the world is very highly interconnected. So we're not going to be out of the pandemic until we ramp up vaccinations in emerging markets. And not only vaccinations, some of the exciting work we're doing is investing in manufacturing the vaccines and health supplies in emerging markets. So that's got to be the first order of business.
When you discuss these issues with developed market leaders and you say, look, you need to give more money, you need to give more assistance, do they buy these arguments, or do they say, look, we're just trying to take care of ourselves? And frankly, this all makes a lot of sense, but it's a very indirect bleed through into our economies.
Well, clearly, advanced economies have made a lot of commitments. So we just did a replenishment of the fund that goes to the poorest countries for concessional finance, and it was the largest ever. That just wrapped up in December. So advanced economies are giving money. But when we look at issues like climate, we can see that a lot of the pledges made to help emerging economies transition away from a carbon economy aren't being kept. So it's tough. Right. I know that lots of economies are struggling right now.
Susan, at Davos in May, the worthies are going to get together to talk about the big picture. You've lived this at McKinsey. What do you need to see out of Davos in late May?
We need to see united front on a couple things. One is, like I said, is debt relief in emerging economies. We've got to go beyond nice words and actually get down to talks about debt relief. Secondly, we've got to talk about this climate transition, because pandemic or no, this is coming, and emerging markets need a lot of help with investment to avoid some of the greenhouse gas emitting industrialization that we went through here. We've got to help them leapfrog ahead and build green from the start.
Got to leave it there, Susan. Thank you. Susan Lund there
Susan,
of
thank you.
IFC. Susan, thank you very much. Setting up the week ahead with economic data on tap all over the place, particularly here in the United States. Payrolls this Friday. We mentioned this about 40 minutes ago. If you missed it, let's do it again. 150K is the median estimate. Let's look at the range. 250 the high, 400K is the low. And look at some of these names looking for a soft print on Friday. Jay Bryson of Wells Fargo. That's a 5 rate hike guess bank for 22. They're looking for negative 100K. Ethan Harris at Bank of America looking for 7 hikes this year, but looking for negative 150K this Friday. So that's the scene, Tom. A lot of these banks expect a soft print on Friday, largely because of Omicron. They're still looking through it. They're still looking for an active Fed this year.
To me, the wage dynamic's really important. Of course, off ECI, I missed that on Friday, John, but wages and benefits bundled in together, and you're going to get a relook on hourly earnings here with the jobs report. There's some other data there as well, but I'm sorry, the Washington Post, 14.1% monthly rent increase. John, have that. 7% rate increase. How the payroll doesn't jive with that. You've got massive negative real income growth.
And that's what's going to be difficult about the year ahead, just the forecast inflation, Lisa. The rental side of the story, that's going to provide that upside pressure to keep inflation elevated, to keep that story persisting through the year ahead. Then the hope the supply chain story works itself out and that fades. Even if it does, that rental story is going to provide some real upward pressure.
Yeah, no kidding, especially if oil prices don't come down. You're talking not only about supply chain disruptions that were supposed to ease, but oil prices were supposed to come down. And it's been quite the opposite. Given that backdrop, we talk about whether it's a miss or a beat for the payrolls number back on Friday. And I find it fascinating, how much do we learn about the tightness or looseness of this jobs market? How much is that going to be the determinant, not necessarily the number? In other words, if it's a weak number, is that actually cause for concern about more wage inflation because the participation rate just is not increasing?
The B of A looking for a punchy wage number as well this Friday, even with that softer jobs print. I think it's going to be really interesting, Tom. The middle of March feels like a long, long way away at this point as we close out January.
Yeah, the middle of March, again, March 11 is what I'm looking at there. I just looked forward to the inflation report that we see here, I think, in 10 days or so. John, you've got Amazon on Thursday. And in terms of the wage dynamic and the jobs report the next day, what is the pressure of Amazon to take the high ground and move from 15 to 16 to 18 to even $19 an hour compensation? They must be under immense pressure to lead on that.
They're leading away in many ways on that front, Tom. They're trying to because they're under pressure to. Lisa, they are under pressure and people recognize they are, and that's why the stock in some ways has done virtually nothing through much of last year compared to a market that delivered a return of close to 30%.
When you say they're under pressure, it's not under pressure from politicians. It's under pressure from the market. And that, I think, is the key aspect here. They are not alone. Big companies better able to withstand it than smaller companies, but they've been out ahead in terms of the margin compression because of having to pay more. And frankly, if you look at the momentum, it's just continued.
John, can we talk about sports?
Please, TK, which sport would you like to discuss?
I love that he listens to me, by the way.
Seriously, Lisa, I was ready to build on this. I was just looking at the performance of Amazon.
I didn't know who Rafa was. I didn't know who Rafa was, but I do know who Ash Barty is. And she's getting no love. She's the first one in Australia to win the Australian Open since time began.
Yeah.
Rod Laver, Ancient Worthy, was there to see it. And what I love about her, John, she left the sport and played cricket for the Brisbane Heat. She got totally burnt out.
You're just dying to share that with us, that last beat.
Well,
that last bit.
I love it when the Brisbane Heat play the Perth Scorchers. That's when I
Gripping
really
for you.
pay attention.
I know. I actually watched Ash Barty at the US Open last summer.
I know.
She was fantastic.
Yeah.
Didn't do very well that
took
year, though.
My tickets and went.
That's right, Tom. Futures down 2/10
Thank you.
on the S&P. Lisa, sports. Lisa goes through something really interesting.
Emma Neighbor forgave me for not going.
I'll go get a coffee.
Up 2 basis points on 10s, 178.50.